With Tom McKenzie.
And here are your top stories. Slowing it down, global equities head for the highest level in 2 months as Fed minutes highlight the FOMC's downshifting plans for rate hikes. Price pressures, EU talks stall over a price cap for Russian oil, while energy ministers from the bloc meet today looking to bridge differences over natural gas. Plus, Binance's CEO warns of more contagion following the collapse of FTX, telling Bloomberg exclusively that crypto leaders must share the blame for the fallout.
I actually reflect on the FTX situation, and I kind of blame myself for tweeting that too late. I think as an industry, we let FTX got too big before we started questioning some of those things.
We'll have plenty more from our interview with CZ. In the meantime, this is what futures are looking like. Of course, happy Thanksgiving to all of our American viewers, Tom. We're going to see probably a bit more subdued in terms of liquidity just because a lot of the U.S. Stocks are closed. And then we look at those minutes from the Fed to give us clues about what happened.
Yeah, a little pre-Thanksgiving gift, arguably, from the FOMC from those minutes. The Bloomberg Intelligence or Bloomberg Economics team saying surprisingly dovish comments from the committee, but also the staff as well, who highlighted that 50% risk of a recession. So there seems to be consensus within the FOMC that you moderate those rate hikes. No consensus around the terminal rate, though. Gains currently in Europe, the Spanish IBEX up 0.3%, the German DAX gaining 0.2%, the French CAC are up just 4 points, and here in the UK, the FTSE 100 currently range-bound. So yes, S&P ending at a 2-month high yesterday on the back of those minutes. Let's switch it over, see how things are playing out then. Of course, it is Thanksgiving, so those US equities will not be trading. We're going to wait, of course, but the future's still pointing to that reopened stateside and gains just 0.1%. The dollar was down. That's giving a bit of a boost to the single currency, 104 on the euro, currently gaining a little under 0.2%. Brent falling 0.5%, $84 a barrel after the EU set out a guideline in terms of that price cap, slightly higher than had been expected. And this is a fascinating political story in Asia. Anwar Ibrahim has been now named as the Prime Minister of Malaysia after a decades-long attempt to become Prime Minister. That has now finally happened, part of the reform movement, reform party there. And again, in terms of Malaysian equities, of almost 4% on that news. Just really important when it comes to the context around Malaysia and its political future. Francine.
Let's dig deeper into the sectors. So what I'm looking at is about 7 groups that are actually on the upside, but does seem to be pretty range-bound. So the sector that's losing the most is about 0.5% lower, and the one that's gaining the most is 0.4% higher. So I have energy, auto parts, basic resources on the up, technology, telecom, and food and beverage on the way down. Now let's get over to our Bloomberg MLive managing editor. He's Mark Cudmore. Mark, you're looking at energy, or actually the price of Brent.
Yes, Francine. Brent crude has been collapsing the last couple of weeks. What is interesting is this has coincided with a slump in the dollar, in which terms Brent crude is normally priced in. What does that mean? Well, it means that the impact of how much energy prices are falling for the rest of the world are multiplied. So, given that it's a UK-based show, for our UK viewers, I've put Brent crude in pound terms, in sterling terms. It's down more than 19% in just the last 20 days. It's really, really quite a dramatic collapse seen since the 4th of November, so just the last 2 weeks. And this is going to have a big feed through into headline inflation figures. Note, it's down more than 30% since the peak in June. Obviously, the big worry in Europe is the energy crisis. It is a multi-year theme. It's not gone away entirely, but it's amazing how much the impact has softened. So headline CPI figures will be lower, and that's going to feed this bond rally we're seeing at the moment, that generally the soft softening of yields. And I think it's going to lull people into complacency over the next couple of months that the inflation bogeyman has gone away. In reality, I think people are going to, next year, going to realize that it's about the persistence of inflation. Sure, headline inflation is going to come down quickly now. Sure, we'll see yields pull back. But ultimately, in 2023, we'll realize that we've still got bad inflation in the services sector, which is much more important, is the bit that stays entrenched. And that's why interest rates are going to need to stay higher. So it's like every view in markets, time spans are important. Yields might come shorter in the near term because of this, but longer term, there's still upside in yields.
Mark, thank you so much. Our Bloomberg MLive managing editor with some really fantastic charts looking at what's happened in the last 20 days and longer term. Mark Cudmore. Now, the Fed's November minutes show policymakers are leaning towards slowing down rate hikes sooner rather than later to mitigate the risks of over-tightening. The signal is a downshift to a 50 basis point hike in December. Joining us now is Fabiana Febeli, is Chief Investment Officer of Equities and Multi-Asset at M&G. Fabiana, thank you so much for joining us. When you look at what we heard from the Fed, is there actually once again a danger that equities are mispricing because they want the Fed to taper some of the hikes?
I'm saying what we've seen over the last few days actually is all supportive of equities, and this was even before the Fed minutes. You saw the recent PPI and CPI numbers showing a retrenchment, or at least a peaking out of inflation, admittedly in the US rather than, for example, in the UK or in Europe. But it's a supportive signal for equities. The bigger issue to look at right now is that the attention of markets will have to necessarily shift to what happens with demand. You saw the PMI numbers yesterday. They are showing a decline. They're consistent with a recession. So how deep the recession is, how soon it comes, and how long it will last, that will really be what will determine the course of equity markets going forward.
Yeah, and Fed officials, or Fed staff at least, flagging a 50% chance of recession in the US. But just going back to those Fed minutes, Fabiana, is it your assessment this is now a more dovish FOMC?
It is an FOMC that is looking at data, the same data that we're all looking at. And I wouldn't be surprised if the next speech that we get from Powell will actually stay quite hawkish. I mean, necessarily the Fed cannot start a dovish language because that would go against what they're trying to do right now, and they don't want economic credit conditions to loosen, because then the heavy lifting would still be ahead. So I'm thinking going forward, we might probably have a more balanced rhetoric, but still not a dovish one, because it would be just too dangerous to do it right now.
So Fabiana, where do you want to be invested in?
So if you look at how we are positioned, we actually believe that the best place to be is fixed income rather than equities. We have increased our exposure to particularly rates, the longer end of the US curve. If we have a recession, that is an area that will most likely outperform equities. And we continue to be very selective within the equity space. We're slightly overweight. We do believe that there are a lot of supporting positive factors and extremely attractive valuations, but just very selective and also very careful with picking the baby when it gets thrown out with the bathwater, as by time to time you have these volatile changes in markets.
Yeah, you've talked about those pockets of opportunity. Energy clearly been outperforming, and we're looking at that space on the back of the news coming out of Brussels. Can energy continue to outperform in a recessionary environment, Fabiana?
Energy has a different number of elements that will impact it. On the one hand, we do believe that oil prices will continue to be supported by the OPEC cuts, and by the fact that actually, if you look at the growth in shale production in the U.S. is slowing down, China reopening could become a pivot in the whole demand side. But at the same time, you also have windfall taxes. I mean, you saw the recent decisions by the UK government. So there's also regulation that you have to look at when it comes to oil and gas companies.
Yeah. Fabiana, so we have Bill Ackman shorting the Hong Kong dollar. We also hear, every day, I guess, more places in China going back into lockdown, or at least severely restricting movement. How do you play China in that part of the world?
We have actually increased our exposure to China. We talked about it on the program over the last few weeks, but it's not necessarily because of the reopening. It's simply because at one point China valuations got to such a depressed level. Again, you have to be extremely selective. There's still regulatory risk out there. There's obviously the risk that there will continue to be COVID shutdowns, but there are some areas, and these are really permeating the whole market, where valuations are at completely depressed levels, even after the last lift in prices, and are incredibly interesting at this point.
Is it your assessment that the Hong Kong dollar peg is potentially at risk?
I find it interesting that it would be at risk at a time when possibly the US dollar has peaked, right? You would have thought that it would be more logic in the other direction. I really don't have visibility of that, but I find it very interesting that this topic would come out right now. I wouldn't have thought about it.
Fabiana, over the next 12 months, what's going to be more exciting? Equities, currencies, or bonds?
It sounds like the fixed income market is probably going to be the place to be, as long as we still have the concern about inflation, and as long as rates at this level, they pay back for a lot of risk. So if you listen to on the fixed income team, they think this is the most exciting market they've had in the last 10 years.
What would you need to see, Fabiana, to move into high yield?
We would need to be less concerned about the economy. We would need to have certainty that the credit outlook remains very solid. For now, we're still quite conservative, and so, for example, we're not moving into the CCC area in high yield. This is a time to look for more quality and resilience.
Okay, the opportunities in the bond markets, that is the focus for 2023 for Fabiana Fedeli and her team, CIO of Equities and Multi-Asset at M&G. Thank you very much indeed. Coming up, Binance is aiming to raise $1 billion for a fund dedicated to buying troubled crypto assets, and there are plenty of those. More from our exclusive interview with Binance CEO Changpeng Zhao. That is next. This is Bloomberg.
Of a push have you seen from the Kishida government in terms of green funding?
The Kishida administration has committed to doubling the amount of investments in so-called green technologies. I think we need more than just pronouncements. We need real money backing very innovative startups and innovative companies in this space.
What do you make of Kishida's new capitalism?
Well, I think his framework is reflective of the challenges that Japan's society is facing, namely that growth has been present, but growth has not been, of course, evenly distributed. But frankly speaking, it's hard to redistribute income if you don't have much income to begin with. If the government and private sector can work together and collaborate to drive more innovative growth startups, that can really drive the income growth that the Kishida government needs to redistribute.
The top names in climate change are on Bloomberg.
Building out local wind, local solar, hydrogen, these are solutions to not just climate issues, but geopolitical issues. We are in a position by 2030 to have 80% of all electricity generated by wind.
Renewables are the safest, the cleanest, and the cheapest form of energy today, especially for countries such as Greece.
Nobody covers climate change like Bloomberg, your global business authority. Information you want Analysis you trust. Everything you need to get set for the start of U.S. trading. Watch Bloomberg The Open with Jonathan Ferro. Weekdays on Bloomberg.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Welcome back to The Open, everyone. We are 13 minutes into the European trading day. Happy Thanksgiving, everyone. Maybe this is why trading volumes are a little bit lighter than usual. The DAX getting some 0.3%. If you look at overall European equities, they're kind of flat, Tom. I mean, they look at the Fed minutes. They kind of say, okay, maybe there's less rate hikes or less aggressive rate hikes going forward, but it's not moving the dial that much.
Yeah, the terminal rate could still come in higher, and market expectations around 5% next year. Bitcoin currently trading at 16,574. That's a gain just of 0.6%. When Binance CEO Changpeng Zhao, or CZ, has told Bloomberg that the company is aiming for a roughly $1 billion fund for the potential purchase of distressed assets in the digital asset sector. He spoke exclusively to Bloomberg's Haslinda Armin about the fallout from the collapse of its rival FTX.
We'll see a little bit of contagion. Whenever one big player goes down, especially a trading platform, there are many other people or institutions with money on the platform. I think we've seen Genesis halting withdrawals. I think there probably may be one or two more, a couple others. I don't know how many. But each time there's cascading effects, the effects become smaller. So I think overall, the industry is fine. But there will be some, probably.
You tweeted, then deleted a tweet suggesting perhaps liquidity issues at the likes of Coinbase as well as Grayscale. Is there reason to worry about that?
I don't think I tweeted about Grayscale. And also, I didn't say there's liquidity issues at Coinbase. I was just referring to two articles. One article says Coinbase says Grayscale has 635K Bitcoins with them. The other article 4 months ago says Bitcoin only has 600K Bitcoins on the exchange. I understand the exchange is separate from the custody. So I just posted as a question, are those two numbers correct? But of course, that caused a lot of misunderstandings among communities, so I deleted the tweet.
Are there solvency issues to do with those companies? Some say that perhaps you tweeted because you wanted to build your own empire to spread the fear, the rumors.
Not so. Okay, so I don't know if there are issues with those other businesses. The thing with other businesses is unless we get very accurate financial statements, wallet addresses, we don't know for sure. But I'm not tweeting that because we want to build our empire. I think I actually reflect on the FTX situation, and I kind of blame myself for tweeting that too late. I think as an industry, we let FTX got too big before we started questioning some of those things. So I'm taking the approach where we ask questions much earlier. It does not mean any attacks on any of our industry peers. We just want to build more transparency and more scrutiny into the industry. Having said that, Coinbase has been operating for 10, 12 years. I think, they're listed company in the US. I'm sure they already have a lot of audited financials. Just we don't see that on the blockchain. For people in the industry, we like to see data on the blockchain, which is actually the most transparent way to display information.
CZ, you've talked about launching a crypto recovery fund. Where are you on that? You've talked about interest being quite substantial. Who's interested?
Yes, so we should have a blog article going out today. There's been back and forth on how to structure that. Do we make it a loose fund or do we make it an actual fund? I think we're kind of going with a loose approach where different industry players will just contribute as they wish. So I think a blog post is going out today. I think we're structuring so that it's going to be quite public. Whoever contributes move funds to a blockchain crypto address that people can look at. So it's not just some behind the scenes fund. So I think that's kind of being finalized now, and I think a blog post is going out soon.
Well, that was Binance Chief Executive CZ actually saying that there's a fraud occurring at FTX, although we must make it clear that it has not been proving. So we're doing our due diligence. He was speaking to our Haslinda Amin. We'll put out also the full interview out on social media, so you can check that out. Joining us now is Bloomberg senior crypto editor, Ana Herrera. Ana, I mean, there's a lot going on in crypto. So he says, look, FTX was a fraud. Again, it's not proven. We don't know, but we're looking into it. But actually, the cryptocurrencies in general will survive. Like, where are we?
Yeah, I think that's the mantra that the crypto crowd believes in now. And to be fair, Bitcoin hasn't fallen 90%, as you would have imagined if you heard a month ago FTX is going to collapse, and maybe Genesis and others. So there is some positivity, I guess, in all this. But obviously, there's so much still that we need to still figure out. First of all, what actually happened at FTX? Where are the funds? And also what's going to happen with Genesis, which is a big brokerage, a very big player. They're raising money, and they've told investors if they don't raise, they might go bankrupt. So, and then obviously we'll see what happens with CZ's fund. What will they buy? I think in the interview he said they were going to revive a bid for Voyager, because FTX was going to be Voyager's savior, and now they need saving. So it's very messy.
Yeah, he said there's going to be a blog post out from the Binance team later today with details about that fund. $1 billion is what we got, what Haslinda got from him in terms of the details. How significant do you think that fund could be? Do you have any more insight into who's involved and whether or not that can actually put a foundation under this?
No, I think we're waiting to see who's actually going to put money there. I think he mentioned that there were other industry participants. Obviously, like, the question is, Binance is becoming very big too. So if something happens there, who's going to rescue Binance? Like, there's always a limit of how, you need to find a savior. It might have been more significant if, say, someone outside the industry was coming in and saving them, because that's fresh capital coming in rather than, the same people putting money in again and again.
So, and it just feels like, first of all, I mean, I was struck, I don't know what struck you the most in the interview, but I was struck that he was saying, I should have tweeted that earlier, as if, instead of going to regulators or doing something official, by tweeting it, you have so much transparency that somehow exonerates you on what happens.
Yeah, I feel like there's a lot going on Twitter, maybe too much in crypto markets. This whole fiasco and debacle started on Twitter. He said he was going to offload some of FTT, which was FTX's token. That triggered some, worries about FTX. And then there was back and forth, and SBF tweeted, a lot happens there, and perhaps, maybe they should rethink, or they'll rethink how much has to go there versus regulators or their own staff. It's just quite surprising.
Just to give a nod to our own craft, it was journalism, it was some reporting, wasn't it, first, that then triggered the tweet, right,
yes,
from CZ. But yeah, I get your point. A lot of it's played out on Twitter. That is a problem, isn't it, potentially, in terms of communication, how this industry adjusts to that. But interesting, as Francine was saying, that CZ was kind of doing some self-reflection on his role there. On his tweeting, yeah. Thank you very much indeed, Bloomberg's senior crypto editor, Ana Herrera. And as Francine was saying, we will put that CZ, the full interview up online, of course, for you to watch. Again, we'll be playing out through the hours. Right, coming up, China's daily COVID cases soar to record numbers as debate continues over how quickly the country should open up to the world. More on that story later. We'll bring you the details. This is Bloomberg.
Humanity consumes 500 billion cups of coffee every year. That's almost double what we consumed a decade ago. And yet, coffee production is one of the most antiquated industries in all of agriculture. Climate pressures like drought, heat, and blight are affecting food producers in different ways all over the world, as climate change becomes something we can taste. In the past year, hundreds of thousands of acres of coffee plantations were wiped out. What's at stake are the livelihoods of around 125 million people. Because, if we're being honest, this is a plant that cannot hold on much longer in a changing climate.
Welcome back to the Open, everyone. 23 minutes into the European trading day. We probably need to look at some individual movers because the general direction of travel, Tom, is look, it's Thanksgiving, so volumes are thin, and then maybe there's a bit of hope that interest rate hikes are not as aggressive as before.
Yes, the assessment from the FOMC then that maybe you're going to get a pull down in terms of the scale of those hikes, even as they continue to debate the final and eventual terminal rate. Let's get the Bloomberg Business Flash then with Alice Atkins. Alice.
Hi, Tom. Fed officials concluded earlier this month that they should soon moderate the pace of interest rate increases to mitigate risks of over-tightening. Minutes from the November meeting signal they're leaning towards a 50 basis point hike in December. Policymakers also said their assessment of the risk of a US recession had grown to almost 50-50. Bloomberg has learned Amazon plans to spend more than $1 billion a year to produce movies for release in cinemas, the biggest commitment by an internet company. Sources say the online retailer plans to make 12 to 15 movies a year for theatrical release, on par with major studios such as Paramount Pictures. Tiger Global has slashed the value of its private funds, including a position in FTX, contributing to a $42 billion decline in assets this year. Tiger also marked down companies including Stripe and Instacart. The markdown shed light on what private companies might be worth, as many have struggled to access capital. That's your Bloomberg Business Flash. Tom, Francine.
Alice Atkins, thank you very much indeed. Francine was going to check in the markets. I was going to have a look at some of the individual movers, so I'll hand it over to Francine.
For the markets,
the
markets are a little bit dull. I mean, let's face it, there's like Thanksgiving. I know we're looking at the minutes, and so there's a hope in the markets that we're going to see less aggressive hikes, but they're pretty much flat. The action is happening in the movers, Tom.
There is absolutely some interesting individual corporate stories, so we're going to bring those to your attention right now. So some earnings from Remy, Cointreau, pretty positive, essentially. They expect a return to normal in the second half. They saw higher first half profit. They confirmed their full-year guidance. Stock, there you go, taking a hit of 4%. Despite that, post-PNL, post-NL, of course, in the Netherlands, very solid gain there, 3.5% or so. The news there is that the Czech billionaire, Krasinski, has raised his stake in the Dutch carrier from 25% to 31%. Dr. Martens, I have no idea if Francine ever wore Dr. Martens, but look at that, a hit of 17%. You did?
I did, although I have to say, in my teenage years, more of a Timberland, you know, the yellow Timberland?
Yeah, there was always a diverging line between the Timberland wearers and the Doc Martens.
Converse and Timberlands were...
I was all in on Doc Martens.
It was me in the 90s.
Okay, we have that image now, Francine. We need a photo. So supply chains, they say broadly kind of catching up post-COVID, but a disappointment when it comes to their earnings in terms of the miss there for Doc Martens. A drop there of almost 17% on the stock price this morning. Right, coming up, NL CEO Francesco Starace on Europe's energy crisis and plans to sell off assets at the Italian utility giant. I'm going to bring you that interview live. That is next. This is Bloomberg.
The 700th anniversary of Dante Alighieri's death has triggered the work of many institutions and offered a very rich schedule of events. Today in Santa Croce, we present one of these projects, that suffered a difficult start because COVID-19 has stopped the project that was shared by the Opera di Santi Croce by the Franciscan community from Florence municipality and the Fund for Religious Building of the Internal Minister. Today, Felice Limosani's project is finally enjoyable. In the Pazzi Chapel, the marvelous architecture by Filippo Brunelleschi, the most important images from the Divine Comedy created by the French illustrator Gustave Doré. Through these images, we can live the violent emotions of hell, the weight of purgatory, and the sublime joy of paradise.
The digital humanities are a cultural occasion to exploit. Summing up, it's about merging humanistic disciplines with new technologies. I find this to be an innovating and modern tool to update culture. Cultural heritage becomes something to hand over to the new generations and not to be put aside. So it's about using technology, pixels, and binary code with a human and humanizing content.
Welcome back to the Open, everyone. 30 minutes into the European trading day, and here are your top stories. Slowing it down. Global equities head for the highest level in 2 months as Fed minutes highlight the FOMC's downshifting plans for rate hikes. Price pressures. EU talks stall over a price cap on Russian oil, while energy ministers from the bloc meet today looking to bridge differences over natural gas. Plus, Binance's chief executive warns of more contagion following the collapse of FTX, telling Bloomberg exclusively that crypto leaders must share the blame for the fallout.
I actually reflect on the FTX situation, and I kind of blame myself for tweeting that too late. We let, I think as an industry, we let FTX got too big before we started questioning some of those things.
I mean, first, Tom, we also need to find out exactly what happened with FTX. A lot of rumors that we're trying to pin down. The markets, what, a bit dull on Thanksgiving?
A bit dull on the top level, on the surface. I'd say you dig a little bit deeper, particularly when it comes to UK assets, is a little bit more interesting. I'll make that case for you shortly. But currently you're seeing the benchmark down about 0.1%. Yes, the Federal Reserve minutes came out and suggested that 50 basis points is very much coming in as consensus for those Fed officials for the month of December. What is not consensus is the terminal rate for the Fed. The market's pricing in around 5%, but clearly that debate continues within the halls of power that is the Federal Reserve. Staff officials coming out saying there is now a 50% chance of recession in the States. The DAX is currently gaining 0.3%, so some gains there in Germany. We're watching, of course, the details around that energy price cap. We're going to go to Maria Tadeo shortly for some details on that. The FTSE 100 currently down 0.3%. That's a drop of 21 points. I was talking about UK assets because there has been a catch-up in terms of the move into gilts on the back of the yield drop that we saw yesterday on those FOMC minutes. Of course, Treasuries not trading today because it's Thanksgiving, but yields are lower across the curve on gilts. The pound as well back to levels we have not seen since around the middle of August. About a 13% gain for the pound since that mini budget crisis towards the end of September. Currently trading, last time I looked, at about 120. Here we go. Here are the UK assets then, 120 on the pound. In terms of euro pound, you're looking at 86. And there's the 10-year, back below 3% in terms of gilts. So good news for the Chancellor, Jeremy Hunt there. 4 basis point move lower, currently at 297. We'll see if that continues. Of course, there's some play-in from what happened in terms of US Treasuries and that downshift expectations in terms of the hike come December. But some positivity around some of those UK assets. Fran, you have some details around another central bank, this time in Sweden.
Yeah, it's the Riksbank of Sweden, and actually it raised interest rates as expected, 75 basis points. So no shocker from the Riksbank on the rate decision. Again, we've seen a lot of economists trying to highlight really how entrenched inflationary pressures are in the country. And if you look at some of the consumer baskets, I mean, it's really incredible to see that 80% of things in the basket are above the target of 2% for the month of October. In terms of some of the options that the Riksbank also wanted to do, there's no change in the plans for its asset holdings. So the Riksbank of Sweden will stop buying at year-end, and then again the balance sheet will shrink as bonds just mature naturally. Onto energy prices, and EU energy ministers are meeting today in Brussels to discuss the European Commission's plan to cap gas prices to avoid abnormal spikes. Will EU Energy Commissioner Kadri Simpson explain how it would work?
The market correction mechanism will be triggered when two conditions are met. So first, the gas price exceeds the predefined level, which we set at 275 euros for 2 weeks. And second, the spread between the TTF price and global LNG price is 58 euros or more for 10 trading days.
This plan has, though, faced fierce pushback. We're joined by Bloomberg's Europe correspondent, Maria, today in Brussels for us. Maria, good morning. Great to have you on the program. So this price cap plan has found very few fans. What are the issues?
Very few fans, and this is going to get very heated today, Francine. And look, this is a very technical issue, but let's break it down in simple terms. Essentially, what you have here are two camps. You have the countries that want to see a price cap, that have been pushing for one for weeks, for months now, and essentially say the conditions laid out by the Commission, 275 euros megawatt hour for 2 weeks, is not a price cap. That is not going to work. It won't bring down prices, and de facto, it's almost like it's designed to never be triggered. I spoke to the Spanish energy minister, and she said at this point, it almost sounds like a bad joke. The flip side to this, of course, are the countries like Germany, the Dutch, too, who say any disruptions, artificially changing prices in a market like this that's so fierce on the energy space, will lead to issues when it comes to supply. So you see the two sides are very far apart on the fundamentals. Now, how you bring them together today, frankly, I don't see how you do it. This looks like a very heated discussion, and at this point, the room for compromise, it's not obvious.
Wow, that's quite the comment, isn't it, from the Spanish, that this is turning into something of a joke. So that's the conversation today on the ground where you are. Meanwhile, and this is important to separate the two because they can become overlapped, another significant but totally separate energy conversation then, or market intervention about to take place. And this is the oil price cap from the G7. Will that work, Maria?
Well, Tom, on a side note, the Spanish, of course, are very fired up because they won yesterday a big match on the World Cup 7-0. Of course, she's fired up this morning. But going back to the oil question, it's a good point because, Tom, I had to do it, you know me. There's two things happening here, and it's important to make a distinction. There is a debate on the gas cap for Russia. There's another one for the oil. The sticking point there is the price point, again, $65 a barrel, potentially 70. Some say at that point, Vladimir Putin is still making money in oil. And remember, let's go back to basics. The idea was that a cap would essentially deprive him of revenue to stop the war in Ukraine. That has not materialized in real life. Now, what I hear, however, is that today it is more likely to get an oil deal than a gas deal. My sources suggesting that a deal on the oil cap, is now within reach.
Okay, more likely to get progress on the oil deal than the gas deal. Just as a nod to Maria, let's just remember Spain 7-0. There we go, versus Costa Rica. Absolutely rampaging the Spanish team. Maria, today, thank you very much on the ground with the details around the energy price gap, the gas one and the oil one being worked through by the G7. Now, earlier this week, utility giant Enel revealed it is seeking to offload 21 billion euros worth of assets to reduce its record debt pile. The Italian company, which issued a profit warning earlier this month, is struggling with rising debt after an acquisition spree to boost renewable energy production. Let's talk through those plans then and much more with the CEO of Enel, Francesco Starace. Mr. Starace, thank you very much for joining us this morning. Can we push you then for more details on that plan to address the balance sheet, address the debt load that you have, 21 billion euros in terms of the asset sales? What is the equity and debt component, and how much progress have you made so far? Are the buyers out there, and are they willing?
The buyers are out there. In fact, they are actually more than willing, and that's one of the reasons why we decided to put some of the assets on sale. I mean, we think that there is a good moment for gas assets, for example. This was a new decision we took in the light of what gas's value is today. And I think the debate we just heard shortly before this interview was underlying the importance of that. And we are going to focus our presence in all the countries where we can have an integrated play, which means help our customer go through this electrification journey the best way possible. And some geographies that don't fit within this scheme are going to be sold to buyers that at the moment are quite hot on them. So we see very little risk on the execution side. In fact, 5 out of these 21 billions have already been executed during 22.
Francesco, it's Francine. Good morning. So the rationale is really to be able to better service your clients in the limited number of countries that you'll be more present in?
Exactly. We have 6 core countries, as we have decided to call them, that are basically Italy, Spain in the European continent, the USA, and in Latin America, Brazil, Chile, and Colombia. These are countries where governments are really committed to electrify and decarbonize the economy, and we have masses of customers that are going through this huge change. I think that's where most of our technology and our know-how lies, and that's where we want to focus our efforts. Elsewhere, there is value to be created for other investors, and we're going to streamline our operations in order to really concentrate on where our skills are best put to work.
And I know there's a big focus for you and the team on the US, and you've won that license now to provide renewable energy to businesses in the United States. Obviously, the Inflation Reduction Act, a big part of that. Just detail for us your ambitions within the US market. You have that license. What is the end goal for you and Enel in the US?
The growth in space in the U.S. is really large. It's been like that for a long time. It's now with the IRA, I think we have a much more stable 10 years horizon in which you can plan your efforts. And part of that is that we want to couple a very strong growth on the generation side with renewables. We're adding roughly 1.5 to 2,000 megawatt every year going forward in the next few years, and as we've been doing so far, with a growth on the business customer base. And you see that starting from the Texas license, we want to really start becoming a retailer on the business side. And I think that's a very promising growth area for the US. So not a regulated business, but a customer business coupled with our generation. On top of that, don't forget, we are the second largest or the first largest operator on demand response. So we already have a big presence in that very interesting market. We are planning, you probably read on some newspapers, to replicate in the US the manufacturing facility that we are now building in Europe. It's a 3,000 megawatt PV panel factory that we are going to most likely also deploy in the US.
So, Francesco, can you talk to us a little bit about your battery storage plan and actually concretely, what are you planning to do in Italy?
In Italy, we have 1,200 megawatts of battery that we have been awarded during a tender that was issued last year. And this plan is during this plan, we will put down these batteries basically. At the end of it, 24, Italy will have this 1,200 megawatts of battery storage on top of all the pump storage we have already, which will make it the most flexible system in Europe at that time. I think that will happen elsewhere in the world. These 3 years, 23, 24, 25, we will install 4,000 megawatts of battery storage across the world in those 6 countries, one of them being Italy with 1,200. The other ones are going to be mostly Latin America and the US.
Francesco, we have a downgrade on Enel from Citi to neutral today. They're warning that the dividend could be at risk. They're saying that maybe some of the assumptions that you put through in terms of power prices and margins, they've described them as very bullish. Does Citi have a point on this?
Well, there is always one analyst that needs to put you somewhere, and that's Citi at this point. I think all the others don't share this point of view of Citi. We obviously don't. I think there is a misunderstanding on most of the assumptions we have put in in this strategy, and we would be very happy to be able to have a discussion on that with Citi. I think it's one analyst out of the 20 that follow us. Most of them have upgraded our company after this strategy. So that doesn't suggest that Citi is wrong, just that they are kind of a minority in the field, I would say.
Okay, if there's one thing, though, that you could do better on this point, what would it be?
I think we could just deliver, and I think that's what you're going to see during 2023, and it's quarter by quarter, and I think that's that's the answer you have to give to the market. Just deliver on the strategy.
Francesco, just briefly, you talked about the IRA, the Inflation Reduction Act in the US, and how that provided 10 years of certainty for you and your industry. Does Europe need a similar plan? Yeah. We've seen and heard about the anger in Europe about the policymaking within the US and the concerns that it's going to disenfranchise European industry. Do you share that concern? What is your advice to policymakers in Brussels?
Look, we belong to the energy industry, and in this sense, I think the two systems that Europe and the US have chosen to pursue more or less the same goal, which is basically accelerate on the decarbonization trend, are quite equivalent. Okay, there are differences in the ways in which this goal is attained, but they are quite equivalent. Maybe that is not exactly the same on manufacturing. I think the manufacturing industry in Europe contends that the IRA has a better package overall, and I think they might have a point. It's not my turf, but on the side of the energy industry, I should say the two packages are equivalent, completely different in the way in which they approach the problem, but the end result is more or less the same.
All right, Francesco, thank you so much. As always, Francesco Starace, the Chief Executive Officer of Enel. Coming up, Pershing Square founder Bill Ackman is betting against the Hong Kong dollar. We'll have the latest on that. This is Bloomberg.
Everybody want to be a consultant, and what are all these consultants doing?
Well, David, I think that we actually defy the label consultant, because sometimes consultant seems to imply that we only give advice. And when you look at what Accenture does, we're really different than the traditional version of a consultant. We're really about relevance and results, and that's what is driving our business.
What about a consulting project? In my example, I'm the CEO, I have a problem, I call you up, I say, solve my problem or give me a solution.
We don't operate as big companies permanently in crisis mode. And so when you think about like how long does it solve things, a lot of it starts with, the company being willing to set aggressive goals. And so what we are trying to do now is work with our clients to work differently and to work faster.
No one covers the world like Bloomberg.
My team thinks 2023, we avoid a recession. I'm a little more skeptical about that.
China and the U.S. both do not want to see nuclear force on the European continent.
The regulators here in the Bahamas are ongoing with their investigation into FTX.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority. In a multi-trillion-dollar industry, there's a lot of ground to cover.
Commodities got absolutely crushed.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Welcome back to the Open, everyone. 48 minutes into the trading day. We look at the Fed outlook. We're also looking at the Swedish krona after we had the Riksbank, again, as expected, a 75 basis point hike there. Now let's get straight to the Bloomberg First Word News with Alice Atkins. Hi, Alice.
Hi, Francine. Veteran opposition leader Anwar Ibrahim is to become Malaysia's Prime Minister after decades of trying. The Malaysian king has picked Anwar's reformist political grouping to lead the next government after no alliance secured a majority in last weekend's election. The palace says the country needs a stable government that will boost the economy and national development. Russia's onslaught against Ukraine's energy infrastructure is plunging the country into darkness, threatening to trigger another refugee exodus. Millions of Ukrainians are currently without heat, light or water following sustained attacks by Moscow. Kyiv has been forced to introduce emergency blackouts and take 3 nuclear plants offline after power lines were knocked out, leaving the reactors unable to transmit electricity. Fed officials concluded earlier this month that they should soon moderate the pace of interest rate increases to mitigate risks of over-tightening. Minutes from the November meeting signal they're leaning towards a 50 basis point hike in December. Policymakers also said their assessment of the risk of a US recession had grown to almost 50-50. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Tom, Francine.
Alice Atkins, thank you. Coming up, daily COVID cases rise to record levels in China. That's as debate continues over how quickly the country should open up to the world. More on that next. This is Bloomberg.
The Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. Celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Information you want, analysis you trust. Everything you need to get set for the start of U.S. trading. Watch Bloomberg The Open with Jonathan Ferro. Weekdays on Bloomberg.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Canada the close. Welcome to Bloomberg Crypto.
Welcome back to the Open. Happy Thursday, happy Thanksgiving. We are 52 minutes into the European trading day, and you are seeing gains of 0.2% on the European benchmark, a slightly more dovish FOMC, and staff there warning of a 50% chance of a recession. Francine.
Now, China's daily COVID infections have climbed to a record high, exceeding the previous peak in April. China is battling an outbreak that has grown since the country adopted a more targeted approach to containing the virus. Well, joining us now from, of course, Hong Kong is Bloomberg's managing editor for Greater China, John Liu. John, if you look at cases in China, they keep on rising. What comes next?
Well, what comes next, Francine, I think is a test of the resolve that the Chinese government has to continue opening, like you said. They started to roll back some of these measures earlier this month. It's partly why we are at a record high in terms of daily infections. But as that infection number has mounted, it's put a lot of pressure on local governments, and they've in turn started to bring back some of these things like lockdowns, like mass testing. And now the question is, are they going to be able to continue to push forward with the opening that we started earlier in November, or are we going to retrench? Are we going to take a step back and go back to sort of a more aggressive COVID-0 stance?
Right, so a lot of uncertainty in terms of the direction of travel for the authorities there on the ground in China. When it comes to the question of Hong Kong, John, and with the news that Pershing founder Bill Ackman saying he's betting against the Hong Kong dollar, it's not the first time, of course, we've had an American or a US money manager taking a pot shot at the Hong Kong dollar. He believes the peg's going to break. How likely is that really, in your experience? Have you charted this?
I mean, there is good reason to think there's going to be pressure on Hong Kong because of the peg. The economy, local economy, is expected to shrink by 3% this year. But because of that peg, interest rates are actually going up because the U.S. is raising rates. And so Hong Kong has to be in lockstep with the Fed. But in terms of challenging the peg, Mr. Einhorn doesn't have a good record. He tried to bet against the peg back in 2011. That didn't work out. George Soros tried to bet against the peg back in the late 90s after the Asian financial crisis. He didn't win. Others, American fund managers, have tried as well, and they've lost money too. And so looking forward, if Hong Kong wants to keep the peg, and there's plenty of reason they would want to do that, they want to keep the market open for Chinese companies wanting to raise a currency that they can easily convert it to US dollars in a stable fashion. Then they have the ammo. They have 400 billion plus in FX reserves to defend that peg.
Yeah, and John, finally, Foxconn offering some $1,400 for severance to make sure that actually some of the violent protests that we saw in Apple City yesterday were placated. How unusual is this?
It is pretty unusual. That factory, Foxconn in general, has been starved of labor, meaning they've generally not been able to get as many workers as they wanted. The case there is a little bit special. You'll remember back in October when the outbreak in Zhengzhou, where the city where that factory is, first started, lots of people started leaving that factory. You'll remember footage of people walking away on the freeway. And so to get those workers back, they offered a special bonus for anybody willing to come back. But there's been a disagreement. Some of the workers that came back said, we agreed to come back for a bonus payment paid to us very, very soon after we got back. That's not the way Foxconn understood it. And that's why there was this violent clash with the authorities earlier this week.
Okay, really comprehensive from John Liu there on the ground for us in Beijing and what's happening in terms of the spread of COVID, but also, of course, the Hong Kong dollar peg and that shot that's being taken by Bill Ackman. We'll see if indeed that does hold. Currently, your markets here in Europe, they are up by 0.3%. Of course, trading closed for Thanksgiving in the US, but futures there are pointing to gains of between 0.3 and 0.4% after the S&P ended at its highest level in 2 months. Francine.
Now that's it for the European Market Open. Surveillance Early Edition is up next. We'll also talk about Manchester United with Jim O'Neill. This is Bloomberg.
China's military power has been growing at an incredible speed over the last 20 years.
A strong country must have a strong military, as only then can it guarantee the security of the nation.
In terms of sphere of influence, we absolutely know that China wants to be dominant in Asia. So there is a target to get to that point, to be a military that is a peer to the greatest militaries in the world by 2035.
The competition for influence is a global one. And through a multi-decade trajectory fueled by planning, money, and pragmatism, China is building a military that allows it to shape the 21st century just as the U.S. shaped the 20th.
The difference between missed opportunity and actionable intelligence. For in-house attorneys who strive to provide superior counsel and strategic advice, Bloomberg Law offers an unmatched platform of analytics tools and business intelligence. All to help improve productivity, mitigate risk, and inform decision-making. For the comprehensive platform that helps you work smarter and faster, the difference is Bloomberg Law.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Slowing it down, global equities head for the highest level in 2 months as Fed minutes highlight the FOMC's downshifting plans for rate hikes. Price pressures, well, EU talks stall over a price cap for Russian oil, while energy ministers from the bloc meet today looking to bridge differences over natural gas. Plus, Binance's chief executive warns of more contagion following the collapse of FTX, telling Bloomberg exclusively that crypto lenders and leaders must share the blame for the fallout.
I actually reflect on the FTX situation, and I kind of blame myself for tweeting that too late. We let, I think as an industry, we let FTX got too big before we started questioning some of those things.
So we'll have plenty more from Haslinda Amin's interview with CZ throughout the day. The markets, you can see European stocks gaining some 0.3%. Remember, it is Thanksgiving, so all American viewers, happy Thanksgiving. It does mean that U.S. stocks are closed. It means that there are lower trading volumes than general. Global stocks in all are aiming for a third straight gain. That's Thursday. The dollar, of course, falling also after the Fed meeting minutes showed support for tapering interest rate increases. Now, technology stocks gaining 0.8%. U.S. dollars, one we're looking out for, and then Bitcoin on the back of that CZ interview, 16,580. Let's get straight also to the European map to see whether there is a difference between what's happening in Germany and what's happening in France. FTSE, for example, actually a story on shortages of eggs. I would check out Bloomberg UK because it's a really interesting story looking at some of the food price securities going forward. The CAC 40 gaining 0.5%. We're also looking at Germany gaining 0.8%. IFO, that data just coming out for the month of November, German Business Confidence Index rising. It's actually rising to 86.3. I don't know whether it's having a huge impact on euro-dollar, but it is better than expected. We'd estimated an 85 figure coming in 1.3 points higher. Now, the Binance chief executive, CZ, has told Haslinda Amin that the company is aiming for a roughly $1 billion fund for the potential purchase of distressed digital assets. He spoke to our Haslinda about the fallout from the collapse of its rival FTX.
We'll see a little bit of contagion. Whenever one big player goes down, especially a trading platform, there are many other people or institutions with money on the platform. I think we've seen Genesis halting withdrawals. I think there probably may be one or two more, a couple others. I don't know how many. But each time there's cascading effects, the effects become smaller. So I think overall, the industry is fine. But there will be some probably.
You tweeted, then deleted a tweet suggesting perhaps liquidity issues at the likes of Coinbase as well as Grayscale. Is there reason to worry about that?
I don't think I tweeted about Grayscale, and also I didn't say there's liquidity issues at Coinbase. I was just referring to two articles. One article says Coinbase says Grayscale has 635K Bitcoins with them. The other article 4 months ago says Bitcoin only has 600K Bitcoins on the exchange. I understand the exchange is separate from the custody. So I just posted as a question, are those two numbers correct? But of course, that caused a lot of misunderstandings among communities, so I deleted the tweet.
Are there solvency issues to do with those companies? Some say that perhaps you tweeted because you wanted to build your own empire to spread the fear, the rumors.
Not so. Okay, so I don't know if there are issues with those other businesses. The thing with other businesses is unless we get very accurate financial statements, wallet addresses, we don't know for sure. But I'm not tweeting that because we want to build our empire. I think I actually reflect on the FTX situation, and I kind of blame myself for tweeting that too late. I think as an industry, we let FTX got too big before we started questioning some of those things. So I'm taking the approach where we ask questions much earlier. It does not mean any attacks on any of our industry peers. We just want to build more transparency and more scrutiny into the industry. Having said that, Coinbase has been operating for 10, 12 years. I think, they're a listed company in the US. I'm sure they already have a lot of audited financials. Just we don't see that on the blockchain. For people in the industry, we like to see data on the blockchain, which is actually the most transparent way to display information.
CZ, you've talked about launching a crypto recovery fund. Where are you on that? You've talked about interest being quite substantial. Who's interested?
Yes, so we should have a blog article going out today. There's been back and forth on how to structure that. Do we make that a loose fund or do we make it an actual fund? I think we're kind of going with a loose approach where different industry players will just contribute as they wish. So I think a blog post is going out today. I think we're structuring so that it's going to be quite public. Whoever contributes move funds to a blockchain crypto address that people can look at. So it's not just some behind the scenes fund. So I think that's kind of being finalized now, and I think a blog post is going out soon.
Now, we heard Binance's chief executive, CZ, alleging fraud occurred at FTX, although we must clear that this has not been proven. So actually, we'll look at exactly what's been told so far, and of course, we'll have an update on you. Just joining us for some reaction is Eddie van der Wald from our MLive team. So Eddie, I mean, you're like the crypto expert. I remember like years ago when you were reading every single book on crypto trying to understand. Yeah, so what does the latest fiasco show us?
Look, I think CZ... He's being a little bit coy there. I think he plays down his own role in this a little bit. I think this was a strategic master play from CZ, right? I think on the one hand, stepping up as a potential savior for FTX and then stepping back was effectively a death knell. Nobody else would look at them after that. See, the great CZ had a look and stepped back and said, they were not worth saving. At the same time, he makes a really good point that whenever there is volatility in the broader crypto space, whenever there's a liquidity crisis at one exchange, it affects others, right? Yeah. So, but he also makes an even stronger point in that the volatility becomes smaller every single time that we see it. I think slowly but surely this industry is maturing, and I think CZ is emerging as a central player in all of this.
So what happens to actually Binance and CZ next? And again, talking about the interplay, it's amazing. He's talking about 1 billion distress levels. Is that more or less than we thought?
Look, I don't think $1 billion is going to have some impact as a core fund. It'll help. Smaller exchanges certainly. But if we're looking at the losses potentially at FTX. The next implosion is going to be even bigger, and it's not going to be enough. But maybe this is the opening gambit, and it's certainly something like this is needed because when you have big centralized exchanges with a lot of customer exposure, you do need a central fund to bail them out, right? this is something that we've done for a long, long time at other exchanges.
Yeah. So, Eddie, does it show, I mean, I don't know how to ask this, does it show the resilience of crypto if it survives this?
Yeah.
Or does it show the vulnerability? Because I mean, on Twitter, everywhere, you even go for a coffee and people say, well, what happened to the due diligence?
Yeah, well, look, I think that's the case every single time. The first time, Francine, I think, we've been looking at this ever since, we had Mt. Gox, which must have been, the 2012 or something like that, right? So you've had these big exchanges implode before, and every time that you do, it brings the industry into question. Every time that it survives, it becomes more resilient. And the volatility, dies down over time. But that does not mean that for the individual players who are affected, that this is in any way less important. I think the regulators need to step up at this point.
And I'm sure that they will at this point. Eddie, what do we know about it being a fraud or not?
Yeah, I think that's too far for me at the moment. I don't know. We don't, I don't think we have some clarity here. CZ has obviously, said some things in that direction. I think we really have to wait for the full findings to come out.
Eddie, thank you so much. Eddie van der Veld there joining us on the very latest on crypto. You can also keep up to date with Eddie and the MLive team's coverage of all the market action today through MLive Go on your Bloomberg terminal. Coming up, we explore key takeaways from the Fed's November meeting and look at markets with Unigestion Chief Executive Fiona Frick. That's coming up shortly, and this is Bloomberg.
Sleep is crucially important, and I think we've moved from this attitude from it's an indulgence, a waste of time, almost an illness that needs a cure.
For something as universally important to human life as sleep, mysteries surrounding its necessity and utility have only just been recently uncovered.
Some of our biggest discoveries were in the 1970s or 1980s, and so it makes it a really exciting field because it seems as though we're uncovering new insights each and every day.
Some scientists are going further to find out how sleep and what happens there can be harnessed to further expand our understanding.
It's easy to memorize things. That makes you smart if you can spit back a lot of facts. But if you want to be wise, if you really want wisdom, you've got to know when and how and why to use that information. And that's what your brain figures out while you're sleeping.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Economics, finance, politics. This is Bloomberg Surveillance, early edition of Francine Lacroix here in London. Happy Thanksgiving to all of our American viewers, especially to my hardworking team in New York. Now, the Fed's November minutes have been published. The central bank concluded it will, quote, soon be appropriate to reduce the pace of rate increases, signaling it's leaning towards a 50 basis point hike next month. Well, we're now joined by Unigestion Chief Executive Officer Fiona Frick. Fiona, there's so much, of course, hope in the markets that the Fed will not be aggressive when it comes to interest rate hikes. Where do you stand on this?
So we think that the tsunami has passed. I would say the 75 basis points hike has passed, and now it's going to be more of the swell following the tsunami. What the minutes says is that the hikes will be perhaps lower, but they will perhaps be for longer. And that is quite logic because we haven't seen yet the impact of the tremendous hikes we had on the consumer demand because there is a lag effect.
So do you think we've reached peak inflation?
There's so much uncertainty. China growth coming back, oil price having new problems. So there is a much higher uncertainty. But the base case we have is that we have reached peak, but the inflation is stabilizing at a high level, and it will take some time to bring it back to a target which is acceptable for central banks.
Fiona, overall, when you look at market sentiment, there's definitely been a rapid recovery, I think, in investor sentiment since October. Does that change?
I think there's two good news, I would say, is that obviously there is a rapid positive sentiment from the equity market coming from the Fed, that they discount the fact that the Fed will go slower in terms of rate hike and that the pace will slow. The good news also is that bonds have now a level where if tomorrow there is a recession or in the next 12 to 18 months, they will play their role as parachutes in a portfolio. So in terms of asset allocation, we believe that having equity and being exposed to the potential rebound, but also having bonds which will play their role, their defensive role, is a good combination.
So does it mean, Fiona, that you've changed some of your asset allocation?
Yeah, so we went back slowly in bonds and we went back slowly in equity because we see two scenarios. Either there is inflation back and recession, and that's good for bonds because now they are at a level where they can go up in price. And either the central bank managed to do this very difficult exercise, which is a soft landing, and that will be good for the economy and therefore for the risky assets such as equity.
Fiona, when you look at dollar, and this has been one of the most incredible, actually, market moves over the last 12 months, when do you call peak high dollar or dollar strength?
Difficult to know because the thing is, it depends very much of the Fed policy in relationship to the CEB policy. And the problem, we can understand why the dollar is up, is positive now because you have rates which are much higher because the Fed has started much more in advance compared to the euro. And second, growth in the US looks much bullish than in Europe, where there is serious problem about recession. So I don't know if we could call it a high, but there is reason why the dollar is quite high.
Is the Eurozone the one that will be trickiest to navigate into 2023 because of higher inflation, of course, the proximity to Russia?
Higher inflation because of dependence on energy, obviously. Higher inflation because it's the imported inflation from a low euro. So there's really, and obviously the war which is close. So yes, Europe, we can see, is really in the middle of the storm, while US earnings season has shown that it's not so bad. 60 to 65% of companies beating estimates either on earnings or revenue. It's not bad.
It is not bad, Fiona. Is there any sector actually in Europe that looks more attractive than others?
I would say that as Europe is flirting more with recession, I would say everything which is consumer defensive, things that cannot be postponed. I think also there's all this European agenda for climate transition, which is strong. So everything which is linked to construction infrastructure will remain strong in Europe. But everything which is more consumer cyclical could correct. Traveling could correct. Retail could correct. Things like that.
And Fiona, when you look at the UK, I know that the FTSE 100 is extremely exposed to energy prices with some of the big caps. Is there any value in FTSE 250 companies or some of the smaller scale companies in the UK because they look attractive? Valuations are cheap.
It's true, but it depends on what you do with your currency risk. Because obviously there is still a huge currency risk with the euro. The positioning in how do England wants to, Great Britain wants to stand with Europe is still not clear in terms of negotiation. There is a food crisis which is still quite important. So I would say that there are some companies which are great and obviously which exports a lot. The problem is what do you do with the currency risk?
Fiona, I can't remember, do you have any exposure actually to crypto assets in general? And I wonder whether there's a read across from what happens with, Binance, FTX into other markets.
No, but no, and we don't trade a crypto asset. For institutional clients, it's still not the norm to trade crypto asset. It's something which is more traded with family offices rather than this kind of clients. What is interesting is that we see in the crypto asset the problem that we had in other markets 20, 30 years ago, which is a lack of regulation, lack of transparency, and a not very clear risk of counterparty. So I think it will be a good test to fix these issues.
Yeah. I mean, the Riksbank, and I know this is, Swedish krona, maybe not something that you're fully invested in, but it was a 75 basis point hike. How aggressive in general, and this was widely flagged by market participants, how aggressive in general are you expecting central banks to be in 2023 in this part of the world?
So I would say 50 basis points, something like that.
You mean for the ECB going forward?
For the ECB, yes. Yeah. Because they are still late. Inflation is still high, so there's still a move to be made. And inflation is something that could have huge repercussion in terms of social rest in Europe. So it needs to be, in a way, we need to fight inflation by bringing rates up, and there must be a fiscal policy to help people which are suffering from this inflation in the society.
Fiona, thank you so much. Fiona Frick there from Unigestion joining us this morning. Coming up, Manchester United is for sale. We'll speak to a man who knows a bit about trying to buy the club, former Goldman Sachs Asset Management chair Jim O'Neill. Now find out whether he'd consider another bid. Stay with us for that. This is Bloomberg.
No one covers the world like Bloomberg.
My team thinks 2023, we avoid a recession. I'm a little more skeptical about that.
China and the U.S. both do not want to see nuclear force on the European continent.
The regulators here in the Bahamas are ongoing with their investigation into FTX.
With unmatched reach and resources from more than 120 countries, the moment news breaks 24 hours a day. Bloomberg, your global business authority.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now. Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
The growth will definitely and hopefully come from China on our side. If you look at China, the prospects are very positive. The comps are probably easier than they have been in the past, and the wine and spirits account for only 1.5% of the total spirits consumed in China. And every time the rules against COVID ease, we see consumption back. We see a strong appetite for our products.
Véronique Montreux, Chief Executive, Eric Vallat on the China outlook after first half results this morning. Now let's get straight to the Bloomberg First Word News. Here's Alice Atkins. Hi, Alice.
Hi, Francine. Veteran opposition leader Anwar Ibrahim is to become Malaysia's Prime Minister after decades of trying. The Malaysian king has picked Anwar's reformist political grouping to lead the next government after no alliance secured a majority in last weekend's election. The palace says the country needs a stable government that will boost the economy and national development. Russia's onslaught against Ukraine's energy infrastructure is plunging the country into darkness, threatening to trigger another refugee exodus. Millions of Ukrainians are currently without heat, light or water following sustained attacks by Moscow. Kyiv has been forced to introduce emergency blackouts and take 3 nuclear plants offline after power lines were knocked out, leaving the reactors unable to transmit electricity. China's daily COVID infections have hit a record high, exceeding the previous peak seen in April. The surge comes as leaders decide whether to tolerate some spread of the virus or revert to strict COVID-0 curbs at the expense of the economy. Major cities ranging from Beijing to Guangzhou have largely come to a standstill as they quarantine people who are infected. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Francine?
Alice, thank you so much. Coming up, the former UK Treasury Minister and member of the House of Lords, Jim O'Neill, on taxing the UK's wealthiest citizens. That interview is up next. We have a full UK special. A couple of stories that actually caught our attention. First of all, the Chancellor talking about non-doms. He did not take away the tax advantages, but now there's a lot more calls for him to do so. The other story we'll have a full roundup of is the UK egg, yes, you heard me right, egg crisis, exposing some of the food supply changes and crunches, and then Manchester United with Jim O'Neill. That's Bloomberg.
A lot's happening on Wall Street.
I'm quite encouraged. The center is holding.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
A lot of these areas still have very, very good valuations.
From businesses most influential and instrumental.
It's knocking it out of the ballpark.
Now's not a great time to be speculative. It's time for a pivot.
We're talking about a significant hit to our standard of living.
Bloomberg Wall Street Week, live tonight with replays all weekend on Bloomberg Television and Radio. No one covers the world like Bloomberg.
My team thinks 2023, we avoid a recession. I'm a little more skeptical about that.
China and the U.S. both do not want to see nuclear force on the European continent.
The regulators here in the Bahamas are ongoing with their investigation into FTX.
With unmatched reach and resources from more than 120 countries, the moment news breaks 24 hours a day. Bloomberg, your global business authority.
Has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now. Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Good morning, everyone, and welcome to Bloomberg UK, a new show with a special focus on the biggest challenges and opportunities facing the British government, the economy and financial services, and also the markets. I'm Francine Lacqua here at London headquarters. Now, the UK Chancellor, Jeremy Hunt, says he's asked the Treasury to look at how much money the government could raise by taxing wealthy foreigners who enjoy so-called non-dom status.
I understand that non-doms pay in tax all the taxes that they do pay, around £8 billion of tax a year. So I want to make sure that wealthy foreigners pay as much tax in this country as possible. Ireland has a non-dom regime. France has a non-dom regime. These are people who are highly mobile, and I want to make sure that we don't do anything that inadvertently loses us more money than we raise.
Now, for more, we're joined by Bloomberg's John Stepek, who has also launched a beautiful new newsletter looking at wealth. So we're looking at UK wealth and actually what this means for your personal finance. John, if you look at what we heard from the Chancellor, so he didn't want to change the status for non-doms, and after so much pressure, now he's looking at it.
Yeah, I mean, you can see why it's politically popular to tax the wealthy and tax the rich. And, you know, I'm sure there are things that can be done around the edges of the non-dom regime that could bring in more money for the UK without necessarily putting too many people off coming here. But the problem is that if we're really looking to reform the tax system and improve it in a way that works for everyone, then we can't be reliant on such a narrow base of taxpayers in the first place. You know,
does it alienate him, first of all? I mean, does the UK economy need the non-doms to keep on spending in the capital?
Well, exactly. I mean, this is one thing. You want the non-doms here because they are the definition of global taxpayers. You know, these people have enough money that they don't have to be here necessarily. There does come a tipping point where if you charge them too much, then they'll just make sure that they aren't in the UK. Now, I know that there's lots of figures bandied about these things. So, I mean, Jeremy Hunt's side says that non-doms spend something like $9 billion a year in the UK, for example. There are other studies from the LSE, for example, that say that you could raise about $3.2 billion a year if you tax them in a certain way. The problem with all of these things is they don't really take account, particularly the forecast of how much tax you could raise, the potential changes in behaviour. You know, I like economists. Some of my best friends are economists, but they have a terrible habit of assuming that no matter what you do, people's actions will remain the same. And they don't. And it's very hard to forecast for that. Sorry, you go.
Yeah, no, so that's a very good point. I hope Jim O'Neill, who's one of the brilliant economists, is not hearing us. No, I'm kidding. He is hearing us. I'm sure he'll give you a little bit of stick for that. John, I mean, you look at marginal taxes. You're basically trying to explain through the narrative of how the UK is changing what it means for your personal wealth. Is it really the middle that's being squeezed the most?
I mean, it is the middle. I mean, I wrote a piece earlier this week, which was just trying to clarify to people how much they're actually paying in income tax. Now, in the UK, we've got two income taxes. We've got income tax itself, and we've got national insurance contributions. Now, technically speaking, national insurance is what you pay to make sure you get a state pension. But in the UK, the state pension is paid out of current taxation. There is no pot that anyone's putting away for you. So, for example, once you become a taxpayer, once you earn more than £12,570 a year, your income tax rate is not 20%, it's 32%. So you're paying a third of every pound you earn to the government. It then goes up to 42%. There's an insane tax rate between 100 and 120, which is 62%. And then above that, you're going up to 47%. Yeah. That's not the worst of it, though.
But the worst of it, so do people move because of it? And we definitely need graphics. I mean, I know we're all taking notes and we're very good at maths as you're watching Bloomberg, but it is a little... I mean,
I'll bring a chart for you
is it
next
just
time.
worse, please? We'll have a chart and we'll put it up like this. Is it worse than other European countries? So is there a danger that if you're a high earner and work in finance, you move to New York, Amsterdam, or elsewhere?
Well, Dev, I mean, certainly it's worse than other English-speaking countries.
Right.
It's not worse than European countries because European countries have got very different social welfare systems. But the problem in the UK is that on the one hand, we've got kind of European levels of taxes, but people would sort of argue that we have kind of, English-speaking levels of public services. And there is that. Obviously, if you're a finance worker in London, you can move to New York. Or somewhere else that kind of, again, where English is the main language. So it's a big risk, but also it's just a fairness point of view.
Yeah.
We've got intergenerational conflict just now already, and actually most graduates are paying a 9% tax in form of paying back their student loans on top of all that. So if you're a graduate earning over £100,000, your marginal tax rate is 71%, and that is, basically it's a tax on aspiration and also a tax on honesty. This encourages people to find ways around the system. It's not easy to do, but where there's a will, there's always a way.
And this is why John Stepek's, of course, daily UK newsletter, Money Distilled, is so good, because he also gives opinions on, a tax of the honest. Of course, check out John Stepek's, editor of the daily Bloomberg UK newsletter, Money Distilled. Daily also, they also have a podcast. It's awesome coverage on Bloomberg. Now, for more on this, but also in general on the UK and the way forward, we're very pleased to welcome Jim O'Neill, former chair of Goldman Sachs Asset Management, former minister of the UK Treasury. Jim, as always, thank you so much for coming on. I feel like the whole conversation on the UK has changed over the last 2 weeks. We talk a lot about Brexit, about maybe some of the downfalls. We're looking at a government that's really trying to shore up finances. How do you think the UK debate has changed over the last 2 weeks?
Well, they've restored conventional fiscal stability, that's for sure. And on one level, it's almost like taking policy back to 2010, or as many people are describing it as austerity 2.0. Of course, in reality, it's not quite that. And I think the Chancellor's budget was quite tactically, not strategically, but tactically clever in that they actually stimulated the economy through fiscal policy for the next 2 years. And to their credit, focusing on education and health. But the framework with this sort of scene setting for quite tough spending controls beyond the next election is exactly the kind of spirit of what happened in 2010 and has presided since. And it's not something I approve of. So tactically smart, strategically disappointing. The UK's core problem is dreadful productivity, even by G7 standards, where it's pretty bad everywhere. And with it, and identifiably probably linked to it, really weak investment spending. And we need a government that is prepared to borrow to invest, which is very different than borrowing to consume.
But Jim, do you think that this government had, a different choice, or they were hamstrung because of the 44 days under Liz Truss and the fact that the markets kind of lost faith in the UK?
They were hamstrung. They're hamstrung by Liz Truss's government, but they're hamstrung also by the ridiculous factions of the Conservative Party. In a strange way, they may be hamstrung from being in office for too long. They don't really seem as though they've got fundamental ideas. And a broader issue, and a challenge for any of our political leadership, is that they're hamstrung by the peculiar way the apparent voting habits of the UK population has shifted, of which the so-called red wall seats are a particularly bright highlight of the dilemmas. And for the Tory party basically can't do what it philosophically believes from the right of centre with the existing power base it's got.
Right. So what does that mean? Is the next government Labour government?
I think it makes it very difficult for this Tory government to be the next government. unless they suddenly discover some much clearer unifying purpose. And you can see, despite what was a very credible budget, and I really admire the way the new Chancellor delivered it. It was nice to have an adult back on the scene. But it's not really doing anything to get us out of these dilemmas. And as you can see in the past week, the mere hint of something getting closer to restoring a common market, and everybody goes completely berserk. And mainstream political parties are just frozen still by the emotion of Brexit, where as time creeps by, there is more and more signs that the UK leaving the EU in the way we left is damaging the UK economy and making our productivity problem even bigger.
So Jim, you haven't seen a change in debate where people talk more about what we've gotten from Brexit so far? You think there's still I guess divisiveness to a point where we cannot discuss Brexit?
I mean, you look at the way Keir Starmer reacted this past week, and in some ways I'm more surprised by that than the way the Tories are trying to deal with it, where I think even Nigel Farage joked that Keir Starmer sounded more like Nigel Farage than Nigel Farage. And they're frozen by this issue where a lot of working class voters, traditionally Labour Party supporters, were Brexit supporters. But it's going to be fascinating as to how this develops, because if you look at those that really do the analysis, there is some evidence that those voters are now reasonably significantly starting to regret that they voted to leave, because going to the basic of GDP, it's your GDP, not mine. They now see a few years later that there's still no GDP for them, and crucially, what is also really disappointing that I regarded myself as I'd call it a modest Remainer, but not a table-thumping one. And the reason why I was like that I did think, if it shook up the status quo and our civil service and the government and the whole Whitehall bubble into really trying to deal with the massive inequality and lack of investment issues in the country, then maybe some good could come of it. But that's not what's happening. We seem to be frozen by everything. And it's not enough to get the UK out of this lack of growth and lack of productivity problem.
Yeah, we'll get back to that. Jim O'Neill, former chair of Goldman Sachs Asset Management. Coming up, we'll also talk about Manchester United, the real reason why we got Jim on TV. The Glazers appear to be open to a sale of the legendary English football club, Manchester United. There's no one that loves the club better than I know of. We'll discuss that with Jim O'Neill, who knows exactly what it's like to bid for the club. This is Bloomberg.
Hydrogen has a very special place in the universe. It's the first element on the periodic table. It is the most abundant element in the universe. And when clean energy advocates think about what can we find which would be as easy to use as fossil fuels, they think about hydrogen. The fuel that will, when burned, only produce water.
We like to imagine that if we just built enough of these and these, we could ditch fossil fuels and save the planet. Unfortunately, it's not that simple. There are some things where you just need good old-fashioned combustible fuel. Now, startups around the world are betting that hydrogen can become the fuel of the 21st century.
While Teslas and the like make for good headlines, the reality is that even if every car on the roads today went electric, it wouldn't be enough to curb global emissions to avoid catastrophic climate change. Greenhouse gas emissions from transportation account for about 29% of total U.S. greenhouse gas emissions. So what about the other 71%?
Buildings across America burn fossil fuels to operate. What we want to do is make that all electric. Instead of burning oil and gas, to give us the energy and electricity we need, we want to do 100% clean energy, all electric. We want to turn buildings into Teslas. Just like a Tesla or an electric vehicle is all electric with no fossil fuels, we want to do that with our buildings. And if we can do it in one building, we can do it in all buildings. And if we do it in all buildings, we'll reduce 30% of U.S. greenhouse gas emissions.
When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers jobs day like Bloomberg.
Economics, finance, politics. This is Bloomberg UK. I'm Francine Lacqua here in London. Now, the owners of Manchester United are exploring strategic options that could lead to a full sale of one of the world's biggest football clubs. Now, the club confirmed in a statement that the Glazer family is working with financial advisors on the process, which could lead to a partial sale of the club or investments in the club stadium and infrastructure. Well, we're back with Jim O'Neill, a former chair of Goldman Sachs Asset Management, more importantly, a lifelong Man United fan, and he's still with us. Jim, back in 2010, you actually led a consortium of investors mounting a £1.25 billion bid for the club. How much do you think the club is valued at now?
Whatever it is, it's too much.
What do you mean it's too much? You're a lifelong fan.
I am, but as linked to what we were touching on about the UK economy before, and as I've talked to you quite a bit about before, I'm a pretty passionate person at this era of Britain's evolution and democracy and capitalism's evolution, what I would say with profit with purpose and not profit with no purpose. And I think whoever tries to satisfy the price that the Rain guys in New York that the Glazers have hired to sell it, they need to think carefully about what it is like becoming an owner of Manchester United. And I think with that as the number one factor, the second one is I can't really see the external environment and the specific environment around the commercial business of football being the same the next 20 years of what it's been the last 20 years. So that suggests to me that a lot of smart, rational people are not going to go chasing after buying Manchester United, despite the facts it is quite easily the biggest sports brand in the world.
Okay, do you think prospective U.S. buyers will be put off by how much Man United fans hated the current owners?
I'd answer you slightly differently. I would say to prospective US buyers, or for that matter, any buyers, if you don't engage the fans and treat them as partners and part of the wonderful thing that is Manchester United, then you're going to have a pretty miserable time owning them.
Okay, do you think, I mean, what happens then longer term? Do you think they will be able to sell? And I don't know whether if it goes for $3-4 billion, you could still lead a consortium. We know a number of people that maybe, bid for Chelsea that could be interested in this club.
I mean, my honest answer is I've no idea. To me right now, it seems completely out of reach of normal human beings, or for that matter, not so normal, very successful business human beings. And I wouldn't want to myself lend my name to people that were just trying to indulge the merry-go-round that it in some ways appears to have become. It may well be that, and I keep thinking, why is it they've had to go public? If you look at the number of words that was issued in the Glazer statements, I think I'm right in saying it's more words than anything they have ever said in 17 years of owning United. And it's quite a strange way of trying to sell what is supposed to be a great asset. And it might well be that they have to adjust their expectations and think very differently. But, we will see. But I can't imagine anybody that I'm close to or I was talking to 12 years ago would really want to go chasing after this auction circus that appears to be unfolding.
Talk to me about this. Why do you think the Americans are trying to get out? Is it because they're calling top market? You're a numbers man, you understand the market. And if that's the case, could this club not sell for 3 billion, 4 billion instead of some of the numbers that are put out there?
You know, I mean, I think it all goes back to the failed Super League bid and the way that fell apart and the scale of protests afterwards. I think in addition, as has sort of become public, and some of your colleagues at Bloomberg have written occasional pieces about this, that, you know, there were 6 children in the Glazer family, and there's probably been significant disagreement for a while. And they tried to explore a minority sale and didn't manage to find any buyer. And then on top of that, I don't think that the sell-off that we've seen in tech stocks, and particularly the interplay between tech and media content, is irrelevant. Because these are the people that are supposed to be the great new promised land of those that would pay a lot more to stream live football. So what is this great upside? And the fact that United and Liverpool are both trying to sell, which are almost definitely by some distance the 2 biggest brands of English football around the world, is not a surprise. And that suggests to me that they see some reasons themselves that the great game of the past 20 years might not have quite the same future. And then on top of that, finally, they're having to compete with clubs that are essentially owned by countries, which is pretty hard to compete with.
Jim, I have a feeling that we'll talk about this some more, so please don't be a stranger. Jim O'Neill joining us, of course, on the UK economy and Man United, former chair of Goldman Sachs Asset Management and former UK government minister. Coming up, Brexit back to haunt the UK's Conservative Party. Prime Minister Rishi Sunak this week forced to deny reports his government is seeking closer ties with the EU. We'll have plenty more on that story shortly, and this is Bloomberg.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Lots happening on Wall Street.
I'm quite encouraged. The center is holding.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights
A lot of these areas still have very, very good valuations.
from businesses most influential and instrumental.
It's knocking it out of the ballpark.
Now's not a great time to be speculative. It's time for a pivot. We're talking about a significant hit to our standard of living.
Bloomberg Wall Street Week, live tonight with replays all weekend on Bloomberg Television and Radio. No one covers the world like Bloomberg.
My team thinks 2023 we avoid a recession. I'm a little more skeptical about that.
China and the U.S. both do not want to see nuclear force on the European continent.
The regulators here in the Bahamas are ongoing with their investigation into FTX.
With unmatched reach and resources from more than 120 countries, the moment news breaks 24 hours a day. Bloomberg, your global business authority.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now. Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Economics, finance, politics. This is Bloomberg UK. I'm Francine Lacqua here in London. Now, this week saw the revival of an issue many in the UK believed was consigned to the past, Brexit. It comes as polls suggest a record high number of Britons believe leaving the EU was actually the wrong choice. Now, for more on all of this, let's bring in Bloomberg's Lizzie Burden, fresh from the CBI in Manchester. So Brexit back on the agenda, or at least we talk about it more.
Yeah, it was unavoidable because, remember, we had Michael Saunders, the former Bank of England policymaker, on the show saying that Brexit has permanently damaged the UK economy, that without it we wouldn't have had an austerity budget. Those comments then put to Swati Dhingra, current BOE policymaker at the Treasury Select Committee. She said it was undeniable that the UK's slowdown in trade was worse than other European countries. And politically, as you mentioned, the polls show that increasingly Britons have buyer's remorse about Brexit. So at the CBI conference, the CBI wanted to talk about growth, Rishi Sunak wanted to talk about innovation, but Brexit dominating the discussions. Take a listen to this.
Under my leadership, the United Kingdom will not pursue any relationship with Europe that relies on alignment with EU laws.
We just want the Boris Johnson Brexit deal to be implemented.
We have to make Brexit work. The deal this government has got us is not working well. It's holding business back, it's holding growth back.
Brexit meant we get to make our own choices on immigration, right? It doesn't mean we go back to an immigration system of the past.
Brexit's done, it doesn't matter how you voted, Brexit's over, we've come out. And so now it's about optimising what we've got.
Having the regulatory freedom to do that is an important opportunity of Brexit.
So the Prime Minister vigorously denying the idea that a Swiss-style deal was on the table, as the Sunday Times had reported, but the question remained, who was the source of the story? And the eyes fall to the Treasury. Jeremy Hunt, the Chancellor, repeatedly refused to deny that it was the Treasury, but he insisted that the story was wrong.
Yeah, and then we have also a couple of stories on clearinghouses to do with Brexit. Lizzie Burden, thank you so much with the very latest there on the CBI. Now, if audio is your cup of tea, don't forget our UK and London-focused podcast in the city. This is Bloomberg.
Lots happening on Wall Street.
I'm quite encouraged. The center is holding.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
A lot of these areas still have very, very good valuations.
From businesses most influential and instrumental.
It's knocking it out of the ballpark.
Now's not a great time to be speculative. It's time for a pivot. We're talking about a significant hit to our standard of living.
Bloomberg Wall Street Week, live tonight with replays all weekend on Bloomberg Television and Radio. No one covers the world like Bloomberg.
My team thinks 2023, we avoid a recession. I'm a little more skeptical about that.
China and the U.S. both do not want to see nuclear force on the European continent.
The regulators here in the Bahamas are ongoing with their investigation into FTX.
With unmatched reach and resources from more than 120 countries, the moment news breaks 24 hours a day. Bloomberg, your global business authority.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, You can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now. Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Good morning. Welcome to Bloomberg Markets. I'm Anna Edwards, live from London. Here are your top stories. Federal Reserve minutes show most policymakers want to slow the pace of interest rate hikes. That has a global gauge of stocks heading for its third straight gain. EU members could be headed for a fight over how to curb rising natural gas prices. Energy ministers are debating that and a cap on Russian oil today in Brussels. And US lawmakers demand that Sam Bankman-Fried and other FTX executives be held accountable for the company's collapse. Meanwhile, Binance talks exclusively to Bloomberg about its plan for a $1 billion fund to buy distressed digital assets. Welcome to Bloomberg Markets, everybody. This is a special edition, live from London, of course, because it is Thanksgiving. No trading in the United States today, but markets here in Europe are fully in their stride, 2 hours into our trading day here in the European equity session. And you can see that European stocks are up by 0.4%. Post-Fed, seeing a bit of a bounce. Global stocks near a 2-month high. S&P futures, of course, no cash trade in the US today, but S&P futures still suggesting that after closing at a 2-month high yesterday on Wall Street, we could see some further upside when we see those markets reopen. Gas prices and crude prices, very topical in Europe. We'll get an update on this story in just a moment. But natural gas prices down a little this morning. Brent crude down a little this morning. We certainly are focused on natural gas prices. Where will the EU decide to cap these? There have been lots of negative headlines surrounding how useful the current proposals are. And Brent crude also in focus as the EU tries to put a cap on Urals crude, which is, of course, the Russian exported version. Will that be at 65 to 70? We'll get into the details, what all of this means for our energy prices. Now, EU energy ministers are meeting today in Brussels to discuss the European Commission's plans for oil and gas caps. While an oil cap deal could be agreed today, the bloc is more divided on the gas price cap. EU Energy Commissioner Kadri Simpson spoke earlier.
European Council gave us clear instructions that we have to take care of possible risks, and we have done so. Of course, some risks do remain, but this proposal has been designed in the way that it helps us if there is another time period like we faced in August, but at the same time it will not be triggering the intervention to the market unless it is really necessary.
Okay, the gas ban being talked about there has faced a lot of pushback. There have been those who suggested that the conditions attached to it have been so stringent, or would be so stringent if this proposal was adopted by EU leaders, that it would mean that it wouldn't apply very often, and certainly it wouldn't with these conditions have applied back in August of this year. So what use that particular gas cap? Let's get into that conversation now. We're joined from Brussels by Bloomberg's Europe correspondent Maria Tadeo. Maria, this gas price cap then being criticised on many, many fronts. What are the issues?
on many fronts, Anna, and this is going to be a heated debate between European energy ministers. And of course, it is a very technical issue, but I think if you break it down in simple terms, what you have are two camps that see things very differently. There's a number of countries that push and want to see a price cap. They've been pushing for it, by the way, for weeks now, and they say the proposal that's been tabled by the Commission, 270 euros megawatt hour for 2 weeks, means that this price cap will never be triggered. De facto, it is not a price cap. It won't bring down prices. Now, on the flip side, you have countries like Germany, but also the Dutch, which suggests that in a fierce global market for energy, when you artificially change prices, you could run into supply issues. For them, the idea of a price cap is fundamentally flawed. Now, the two sides at this point are very far apart in their arguments. And frankly, Anna, if you ask me, do we get a compromise solution today? At this point, to me, I don't have a crystal ball, but I think it's very unlikely.
Yeah, if they conceptually disagree about whether you need it, and then trying to set a level to apply it, very difficult, and all those conditions. Right, moving on from gas then, Maria, there's also a conversation about oil to be had, another significant but separate energy market intervention taking place around the oil markets and trying to put an oil price cap on Russian crude in particular, this in conjunction with the G7. Are we more likely to get a deal on that at the EU level?
Yes, and Anna, it's a good point to make because there's two separate debates that are going on. They run in parallel, but they're very different too in nature. You have the gas, but you also have the oil cap on Russian oil. Now, what we hear is that European officials will meet today, late today, around 7 p.m. local time, and will try to get to an agreement on the price point. The sticking issue here, of course, is the level. We've talked about $65 a barrel, potentially even 70. But for some of the more hawkish countries on Russia, like the Poles, but also the Baltics, they still believe $65 a barrel is way too generous on Vladimir Putin. The goal here is that he won't have the revenue to continue the war in Ukraine, but we see manifestly that the fight continues. Now, this meeting is going to happen late afternoon here in Brussels. What we understand, however, is that a deal is within reach and could come today.
Okay, Maria, thank you so much for the update. Bloomberg's Maria today with the latest on gas talks and oil conversations in Brussels. For more on the energy markets, let's bring into the conversation Keshav Lohia, who is the CEO of Oilytics and joins me here on set in London. Keshav, very nice to speak to you. Thank you for coming to join us today. There's a lot going on in energy markets right now. As Maria was setting out, there's the gas conversation and oil. Let's start with what the EU and to some extent the G7, well, yes, the G7 also are proposing on oil. There's talk around $65 to $70 being a cap on Urals crude. So this is Russian crude. When we got those announcements yesterday, that idea being suggested, we saw Brent prices fall off. Is that because there is an assumption that if the price is set there, it's not very different from where we are right now, so it won't push up demand for alternatives such as Brent? Is that the sort of market mechanics?
Yeah. Firstly, Anna, thank you for having me in the studio. Yes, there's a lot of confusion in the headlines right now. But if you just take a step back from this price cap, it's not about the price level. It's, you can't put a static price on a very volatile oil market. Yes, the cap might be higher than the current Urals price, but in next week it could be lower. So a static price in general, it just doesn't work. And that's why, even if you take a step back from price cap, Russia has said they will not sell the oil to anyone who agrees to this price cap. So we're slowly ticking to, we're moving on to a ticking time bomb where, the 5th December is 2 weeks away, and this price cap, which is being devised by government officials,
yes,
but it has no reality on how the oil markets actually work.
Okay, but I thought that Europe didn't want to buy Russian crude anyway. They just want to make it, they just want to apply this cap to it so that some of the other subsidiary industries, such as shipping and insurance, can continue to insure or ship this product if a level above the cap has not been paid, if you see what I mean.
Yes. So the objective of the West is basically they're trying to have the best of both worlds, but in reality, if they really want this to work, either you depress Russian oil to complete zero, which the global oil markets do not want, or you move to the way where you just let Russian oil flow. And what's happening in reality is that even if you try to impose these price caps, the countries who could buy oil, they haven't agreed to this price cap. The countries like India, basically outside of G7. But there's still a lot of uncertainty around. We still don't know how the services, the shipping will react to this because no one has an idea, and these headlines change every day.
But I suppose non-G7 countries, if the G7 applied this rule, applied this cap, and said we won't insure or move anything if you pay more for it than this, then India and other countries will have a good bargaining position to say to Russia, well, you know, there's not so much demand out there for your product anymore, so we won't pay you quite so much. I suppose even if they don't sign up to the cap, that's maybe how it would influence pricing. Yeah,
that is a big if, but, you know, Russia gets all the headlines out here. There's a lot of other bearish factors out there. So we have a short-term bearish sentiment right now, but a long-term bullish structural market right now. Russia is making all the headlines, but you know there's China, which is moving the markets a lot more to the downside than given all this supply outages right now. But just to go back on your shipping point, you know, even if there is some kind of a deal, how you implement it is still very, very tricky. Yes. And also there's just not enough tankers out there to move Russian oil, if they don't have the right insurance, to move from to Europe to the other parts of the world. So slowly Russian supply will grind to a halt, or not a halt, but like, you know, the exports will trickle down. Okay, so that could push some upward pressure on prices, I suppose. Then we've got the China story, though, and is that adding downward pressure to prices? Because every time we see concern around the extent of COVID infections, the length of time it is going to take to get out of very strict lockdowns through the winter in China, that seems to put downward pressure on commodity prices. Yeah, so that's a good point, Anna. So like a few weeks ago, literally 3-4 weeks ago, Russia and China were the two most bullish factors out there for the oil markets. That sentiment has completely changed. You know, Russia, the price cap, and China, no one can guess where they're going to reopen, and any reopening hints just get squashed away. And now with cases exploding, in the official cases in the high 20,000s, a hard lockdown is inevitable. But it's a guessing game on when China will eventually back down. But this deadline has been pushed further and further and further away. On the gas price, let's just save a moment to think about what's happening with gas, Keshav, as well. Our correspondent in Brussels sounded less optimistic that any kind of deal can be reached there, as there are still fundamental differences of opinion as to whether it is sensible to put a cap on this particular product. Yeah, and what we've seen from the gas markets, they've set a price cap so high, 275 euros for TTF, and the duration, not just one day, but it has to be for 2 weeks. So even if you go in the history of the TTF prices this year, even at the most extreme spikes— in August, yeah, you know, the most extreme spikes, it didn't breach that level. So the only way a price cap will work is if you set a price cap so high that it never gets hit. And similarly, what we are seeing is this oil market, you know, initially it was 60, now it's 65, 70. But in order to have everyone on board in Europe, you have to make it a bit loose. I suppose what really matters also for the gas market is going to be the weather and the winter. And what are the long forecasts telling us, Keshav, about where that takes us? Yeah, I mean, you know, in Europe, we've been lucky with the mild winter, but, you know, weather is anyone's guessing game. But, you know, eventually cold winter will come in. But the thing is that, yes, we can have depressed spot prices, but we are having structurally higher prices. And LNG markets have been very resilient, but structurally higher. And Europe will have to bid with the rest of the world to get its energy stability and security. Yes, we saw Qatar sign a deal with China, didn't we? A lot of the conversation about Qatar in Europe has been of a different nature lately. Thank you very much, Keshav, for joining us. Good to get your perspective. Keshav Lahir of Oilytics, with views on the oil sector and also on gas prices. Keeping you up to date then with news from around the world. Let's get a broader First Word news update. For that, let's go to Angel Feliciano. Good morning to you, Angel.
Hi, Anna. Good morning. Most Federal Reserve officials now seek to slow the pace of interest rate hikes. That's according to minutes of the latest meeting of policymakers. It's a signal that they're leaning towards downshifting to a 50 basis point hike in December. Talks between European Union nations on a proposed price cap for Russian oil have bogged down. Bloomberg's learned that the EU's executive arm wants a cap of $65 a barrel. Poland and the Baltics nations believe that's too generous to Moscow. But Greece and other countries with big shipping industries don't want to go below $70. In Ukraine, a barrage of Russian missiles have knocked out power for millions. The attack came at a time when temperatures are below freezing. In a virtual appearance before the UN Security Council, Ukraine President Vladimir Zelensky called the missile assault a clear crime against humanity. Here in the UK, Chancellor of the Exchequer Jeremy Hunt wants the Treasury to assess the benefits of taxing wealthy foreigners with so-called non-dom status. That allows British residents whose permanent home or domicile is outside the country to avoid paying UK taxes on overseas earnings. Hunt says he wants to make sure that any move to tax non-doms doesn't lead them to leave the UK. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Angel Feliciano. This is Bloomberg. Anna?
Angel, thank you. That non-doms policy the government in the UK now consulting on, obviously talked about a lot by the UK opposition of late. Now, coming up on this programme, back to the corporate earnings story. French cognac maker Rémy Cointreau has seen 2 years of exceptional growth. But does the business expect that to continue? Part of our interview with the CEO next. This is Bloomberg.
In the past 2 decades, China has built large infrastructure projects in almost every country in Africa.
African governments themselves said, we are tired of aid and charity. We want to do trade. We want to be treated like partners. The Chinese came along and said, great, we don't do aid and charity. We want to do business with you.
Global Gateway will mobilize 300 billion euros till 2027.
Now the US and Europe are answering back with their own infrastructure initiatives to counter China. But African experts are skeptical.
China has been that guy around the corner with, a bouquet of flowers to Africa, the US, Europe and the UK have time and time again said, be careful of the flowers you see out of the window, they have thorns on them.
You will shed light on dark matter. You will make aging optional. You will turn 5G up to 11. Because when you subscribe to Bloomberg, you won't just get news. You'll get insight into limitless possibilities, knowledge, and inspiration to feed your ambition. So before you invent, pioneer, disrupt, before you change the world, Bloomberg.
This is Bloomberg Markets. I'm Anna Edwards, live in London. Now, the French cognac maker Rémy Cointreau expects a return to normal consumption following 2 years of exceptional post-pandemic growth. However, the company is keeping a close eye on potential pressures. The CEO, Eric Vallat, spoke with Bloomberg's Manus Cranny from Paris.
The growth will definitely and hopefully come from China on our side. This is the way I look at it. Obviously, I'm not speaking for the very short term. We hear about measures that are being taken this week, which are not going to help in the very short term. But if you look at China, the prospects are very positive. The comps are probably easier than they have been in the past, and the wine and spirits account for only 1.5% of the total spirits consumed in China. And every time the rules against COVID ease, we see consumption back. We see a strong appetite for our products. The last example I have in mind is we had 3 brand days in Plaza 66, which is the most prestigious luxury mall in Shanghai last weekend, and we hit record sales. Traffic was absolutely huge. We gathered something like 600 VIPs in our boutique, which was truly amazing. And now Shanghai is locking down again. So, the learning from last year anyway, so we have to adapt. We have to be flexible.
Okay, you have these monster moments, I suppose, when you get the reopening. I had Moët Hennessy. They're running out of champagne. Have you got enough stock? Are you fully stocked? Are you carrying extra stock? Are you ramping up preparedness for the reopening?
We are ramping up for sure, preparing for the reopening and again adapting to the environment. We were hit, for instance, in May last year because we had only one warehouse in China, which was based in Shanghai, and Shanghai was locked down. Now we have 3. So we are preparing this way as well, from a logistics standpoint. On the liquid front, we've been running out of stock for the past 2 years as the US were booming dramatically. We are now in the process of recovering a good level of stock, even though our stocks are still very low in China, for instance, while they are now improving in the US. But clearly you see celebration, whether it's in, sorry, please.
Sorry. No, but I suppose the natural corollary to that is, I mean, it's a beautiful premier product. It's already moderately expensive to have. So do you squeeze it? Are you going to raise prices given the restricted supply and the issues around that? What is tolerable for your average client? Are you going to raise prices 5%, 10%? Just give us an indication.
Between 5 and 10 is a good benchmark. Huh? Just so you know, prices, in fact, current inflation is creating a positive context when it comes to managing prices, obviously, and it's favorable as such. But if you drive your price, depending on inflation, you take risks for your brand. So for us, in fact, pricing is driven first and foremost by pricing power, which comes from the quality of the product, the desirability of the brand, the quality of the experience you can propose to your clients.
The CEO of Rémy Cointreau speaking earlier to my colleague Manus Cranny here on Bloomberg TV. Now let's pivot from the micro to the macro. Most Federal Reserve officials now seek to slow the pace of interest rate hikes. That is according to the minutes of the latest meeting of policymakers. It's a signal that they are leaning towards downshifting to a 50 basis point hike in December rather than sticking with the jumbo 75 basis point hikes that we've seen of late. Joining us now with equities analysis, Bloomberg equities editor Ksenia Galushko. Ksenia, nice to speak to you. So the Fed, it seems doves in charge at the Fed. That was certainly the message coming through in the minutes, or there are more dovish voices at the Fed than maybe some had anticipated, and that's being seen as positive for stocks.
Absolutely, yes, and we saw the positive reaction on Wall Street last night. The only concern here is that equities have rallied quite a bit from their September lows already. So the S&P is up about 10%. We've seen a recovery in the Dow Jones, almost reaching bull market levels. So how much further can this rally go? Perhaps investors have already priced in this sort of dovish pivot by the Federal Reserve on the back of the lower than expected inflation, on the back of robust earnings. So we'll see how much longer this rally can really last into the end of the year.
Yeah, and the market has been fixated on this idea of a pivot, been trying to front run the pivot, if you like, trying to get ahead of that pivot narrative for some time. And as such, we're already, as you point out, at 2-month highs on many of these markets. Where does that leave the earnings story then? Because through all of this, tech stocks in particular were at the epicenter, selling off really heavily because, of course, they don't necessarily make the profits of other sectors. And so where does this leave tech, for example?
Well, tech is really the biggest question for next year because tech obviously is a huge sector and factor for the S&P 500 because of its major weighting. So looking back just a month ago, analysts in general were forecasting profit recovery for big tech next year, which would have bode well for the NASDAQ and the S&P 500. But just a month later, now they're seeing a contraction next year, which is a big source of concern for the overall S&P 500's future. Because if tech earnings do contract next year, and we've seen very strong warnings from majors like Apple, like Google, ad growth is slowing down. Chip makers are really concerned about the supply issues. And in general, there are plenty of headwinds going into next year, and tech could really weigh on the entire U.S. stock market, even if other sectors end up doing better in terms of profit growth.
Okay, Ksenia, thank you very much. We'll pick up this conversation with a guest shortly. Bloomberg's Ksenia Galushko joining us there to talk about equities. And for more market analysis, check out MLIV Go on your Bloomberg terminal. More to come on the equity markets globally, as it is Thanksgiving in the United States. So happy Thanksgiving if you're celebrating. More on the markets shortly. This is Bloomberg.
No one covers the world like Bloomberg.
My team thinks 2023 we avoid a recession. I'm a little more skeptical about that.
China and the U.S. both do not want to see nuclear force on the European continent.
The regulators here in the Bahamas are ongoing with their investigation into FTX.
With unmatched reach and resources from more than 120 countries, the moment news breaks 24 hours a day. Bloomberg, your global business authority.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Markets countdown in Europe from the financial centers of the world. Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
Strong enough to stay. We will never, no, never. We will never, no.
This is Bloomberg Markets. I'm Anna Edwards for this special edition of Bloomberg Markets for Thanksgiving. I'm live in London. Let us get up to date on some of the biggest business stories we're covering this hour. Here's Angel Feliciano with a Bloomberg Business Flash. Angel.
Anna, Foxconn has taken steps to end the chaos at its iPhone City complex in China. It's offering $1,400 to any workers who choose to leave. It's intended to appease disgruntled new hires who played a central role in the protests that rocked the world's largest iPhone factory. Nintendo has set a new sales record. 2 Pokemon games for its Switch console sold 10 million copies globally in the first 3 days of release. Switch relies on big game launches to maintain momentum for its software and hardware sales. And that's your Bloomberg Business Flash. Anna?
Thanks very much. We'll get into a conversation about European equity strategy next with Sissy. This is Bloomberg.
The standard way venture firms work is you commit capital, let's say over a 5-year investment period, something like that.
Yeah, exactly. Right.
And then the fund just typically lasts maybe 10 years or so.
15. Well, these days longer. So often 15. Often the tail extends out to 20 years because these companies take a long time to develop.
And somebody that invests in a venture fund today should be trying to get rates of return of 20%, would you say, or more?
You know, top-end venture is sort of 3x net of fees. You know, ideally you're hoping for more than that. You're hoping for 5x or more. You know, you're illiquid the entire time, right? So you'd hope to get paid for the liquidity.
And today,
so yeah, maybe 20 to 40% if things go well is sort of baseline.
Let's take another subject. Let's suppose somebody says, I don't want to invest in Andreessen Horowitz. I want to be Mark Andreessen. How does somebody become a venture capitalist? What are the skill sets for good venture capitalists? There's a high degree of intelligence, hard work, a lot of luck, dress the right part, don't wear a tie. What are the things that make one a good venture capitalist?
So the highly successful VCs historically are very idiosyncratic. You have people from very different backgrounds. Mike Morris is a former newspaper reporter. John Doerr is a former chip salesman. You've got people with very different, Jim Breyer has more of this kind of blue chip investment background. You have people with very different backgrounds and experiences. And so I think it's some set of skills and some set of knowledge, and then there seems to be a taste component to it that's really hard to measure and really hard to predict.
When innovation strikes, Bloomberg Technology is there with the news and analysis you need. Every weekday, only on Bloomberg.
This is Bloomberg Markets. I'm Anna Edwards, live in London. Let's get a quick check of the markets for you. 2.5 hours into the European trading session. Of course, no trading over in the United States in terms of cash, equities or treasuries markets because it is Thanksgiving. But this is what the European picture looks like right now. We're up by 0.5%. US futures point a little higher. All of this post-Fed. We'll get into a conversation of that on that shortly. The energy markets firmly in focus as European ambassadors still trying to nail down details, or energy ministers rather, around a natural gas cap, also around a cap on Russian crude, and so that is also in focus as well, that in conjunction with the G7. So that's the story around equity markets and commodities. Let's just show you quickly what's happening with FX markets as well. The dollar very much on the back foot, which goes hand in hand, I guess, with the risk-on mood we're seeing in equity markets and elsewhere post the Fed minutes. With kind of risk on, the yen is then gaining. The move lower in the dollar is helping here, but also the fact that energy has become cheaper, and we just showed oil prices, 85.23 on Brent. For a nation that imports oil, that's important. We've got the Hong Kong dollar in as well. We don't often talk about this because of its pegged nature, but there's a conversation to be had around that, and we'll do that shortly, to do with Bill Ackman and what he's doing with the Hong Kong dollar. And Bitcoin also in focus today. We've had a really interesting exclusive conversation with CZ over at Binance. We'll get his view on contagion in the sector and his bailout fund for troubled crypto, also worth talking about. We'll get to all those stories shortly. Let's get back to the equity markets. Joining us now is Beata Manthi, Citi Global Equity Strategist. Beata, really nice to have you with us. So this Thanksgiving, markets clearly very thankful for what they heard from the Fed yesterday. It seems that there were more dovish voices at the Fed than perhaps the markets had anticipated. Is this strength in equities then? Is it justified?
Hi, good morning, Anna. So the market really wants to see the dovish story out of the Fed, but we worry that there are two stories. There's a positive story that, yes, at the next meeting, we are going to get 50 basis points hike, not 75, as was previously expected by the market. But we might see a higher terminal rate. So Citi economists are now forecasting 5.25, 5.50 terminal rate out of the Fed. So that's higher than what the market has been expecting and pricing in back a few weeks ago. So it's
okay. And what does, yeah. Sorry, I was going to say, what does that do then to, if rates are going to keep going higher, what does that do to appetite for stocks, Beata?
So I don't think that the Fed is as important as it was before. I think the most important story right now is what the earnings are going to do and how deep the recession is going to be. Of course, these two are interrelated. And really, in terms of the market level, we've had a really nice rally. And you know, my target suggests only 8% upside by the end of the next year, so over the next 14 months. Really, to chase the market from these levels, I would need to see 20% upside. We don't have that anymore.
Okay, if you can see 8% upside, Beata, how do we get to 8% upside by the end of next year? I think you're talking about Europe there. If we see an earnings recession ahead, give us your thoughts on how that earnings recession might play out for stock performance.
Sure. So the bad story is we are going to have an earnings recession. I think it's inevitable. Our models suggest around 10% contraction, so it's a milder level of recession. You could argue it could be deeper. That's the risks, of course, to our forecast. But the good news is that probably around 10-15% EPS contraction is already priced in by the European equity markets right now. So what that means for the prices going forward, you know, the market is not going to go straight up in a straight line. We think the volatility is going to continue, so you're going to be selling the rallies, buying into the dips for some time longer until the market finally sees the good news ahead and is going to be properly find the bottom.
And where do we see this most obviously priced in, Beata? When you look at sector breakdown, for example, is it where a lot of the worry has focused around energy, around metals, mining, chemicals, those sort of deep cyclical sectors?
Indeed. So for the market, as I've mentioned, 15% EPS contraction in the price. That's what happened in 2011 European sovereign crisis. So this level of recession has happened in the past. However, it's a completely different picture when we dive into the sectors. So we find that these deep cyclical sectors like metals and mining, energy or autos are already pricing in a much deeper EPS recession. For mining, for example, 50% EPS contraction into the next year. Of course, history suggests it could get worse, as this is a very cyclical sector, but 50% is already a very meaningful number already in the prices and in the valuations of the sector. While on the contrary, when I look at the more expensive cyclical sectors, like more growthy ones, like industrials, for example, they are pricing in very, very little EPS contraction into the next year. So yes, they derated a lot this year. However, their valuations are still relatively high. Therefore, I don't think they are discounting any meaningful downturn going forward.
Okay, so quite a contrast on what's priced in for those various sectors, Beata. With all of that in mind, and thinking about maybe some of the mining exposure that we see here in London, how do you view what's coming out of China? There was a lot of expectation a couple of weeks ago that we'd see an end to COVID-0 policy and an opening up of China. Well, that's run up against, the winter in China, and it's clear that that's going to take longer than maybe some had anticipated initially. What are your expectations for China over the year ahead?
Of course, so our view is that the reopening story is going to take longer. It was never going to reopen straight away, right? So we need to learn to be a bit more patient there. However, what it means for the metals and mining, of course, longer term, it should be bullish, but in the short term, when I look at the forecast from our commodity strategies, they are marginally worried over 3 to 6 months and more bullish into 12 or 24 months prices.
Thanks so much, Beata, for joining us. Beata Manthe of Citi joining us on this special edition of Bloomberg Markets. Thank you very much for coming to speak to us here on Bloomberg TV. Now, let's talk about what's going on in FX markets. And this story has proven to be pretty popular on the Bloomberg terminal. The billionaire investor Bill Ackman is betting against the Hong Kong dollar and its peg with the greenback. Bloomberg's Sophia Horta-Acosta joins us now from our Hong Kong bureau to take us through what we need to know about this. So Bill Ackman in the spotlight here, Hong Kong and its dollar peg in the spotlight. Sophia, good to speak to you. So take us through, how is Bill positioning around this? And then we'll come to the fundamentals as to why. I think he's short the Hong Kong dollar, which we should keep in mind.
Yes, exactly. So he said on his Twitter, he announced this on his Twitter feed, that he has a large notional position on Hong Kong dollar puts. So that essentially means that he's bearish on the Hong Kong dollar versus the US dollar. We don't know the size of this wager. He's saying it's large and notional. You know, and I tried to look for evidence of large bets in the FX market. The terminal does have this kind of data, and there isn't really evidence that this is happening because, I mean, the Hong Kong dollar has actually been strengthening. This is a little bit of a strange time to be announcing this kind of trade, and the options market is actually positioning for a recovery, a rebound in the pegged currency. And Anna, I know the Hong Kong dollar is a pegged currency. It shouldn't be exciting, but it's exciting to us. I mean, the peg has been in focus for years and years and years. I mean, we've had Kyle Bass betting against it. We had George Soros betting against it in 1998 after the Asian financial crisis, and none of them have succeeded. And the HKMA, which is the de facto central bank, has repeatedly said that the peg is here to stay.
Okay. And we were just showing the chart. You rightly point out this is quite interesting timing because for some time the strength of the dollar had been testing that peg and the authorities forced to step in and defend it, but not really of late because most recently, as you can see on this chart here, you can see that we've seen movement away from that pegged area. So what is the case that Bill Ackman is making? I think he's citing one of our Bloomberg opinion columnists as to the reasons why, in his view, the peg could be under pressure.
Yes, exactly. And this is a long-term trade. He's essentially saying that the peg no longer makes sense for Hong Kong because Hong Kong is a Chinese city. It has enormous exposure to the Chinese economy, but it depends on U.S. monetary policy, and it has to follow U.S. monetary policy. That has actually been a very interesting dynamic this year because, of course, we have the Chinese economy weakening and the Fed hiking rates at an incredibly fast pace, which puts Hong Kong in a very difficult position, and we're seeing the impact on the economy. GDP is set to contract more than 4% this year. But Hong Kong has shown in the past repeatedly that it can stomach a lot of economic pain to maintain the peg because the key thing here is financial stability. Hong Kong has a reputation and wants to maintain the reputation of a stable global financial hub. So the peg is almost a representation of that, Anna.
Okay. Sophia, thanks very much for the update. Bloomberg's Sophia Halter-Acosta with the latest on the Bill Ackman view and what that is doing to FX markets in Hong Kong. Keeping you up to date then with news from around the world. Let's get a First Word News update for that. Here's Angel.
Thanks, Anna. In China, daily COVID infections have risen to a record high. The country reported almost 30,000 new infections on Wednesday. The recent surge comes at a critical moment for leaders. They have to decide whether to tolerate some spread of the virus or revert to strict COVID-0 restrictions that could hurt the economy. Most Federal Reserve officials now seek to slow the pace of interest rate hikes. That's according to the minutes of the latest meeting of policymakers. It's a signal that they are leaning toward downshifting to a 50 basis point hike in December. In Colorado, the suspect in the killing of 5 people at a gay nightclub will be held without bail. Anderson Aldrich made an initial court appearance Wednesday. Aldrich was beaten into submission by patrons during Saturday night's shooting. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Angel Feliciano. This is Bloomberg. Anna?
Angel, thank you. Coming up on the program, part of our exclusive interview with the Binance CEO, where he sees crypto headed after the fall of Sam Bankman-Fried's FTX empire. We'll get into that next. This is Bloomberg.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He taught himself, self-made day trader. Yes. And so he's on the bus
after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
You know, in many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, our fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This is Bloomberg Markets. I'm Anna Edwards, live in London. 10:43 here in London. A few hours into our trading session here in Europe. It is Thanksgiving, so no cash trading in the United States today. Now, Binance CEO Changpeng Zhao has told Bloomberg that the company is aiming for a roughly $1 billion fund for the potential purchase of distressed assets in the digital asset sector, more commonly known as CZ, of course. He spoke exclusively to Bloomberg's Haslinda Armin about the fallout from the collapse of its rival FTX.
We'll see a little bit of contagion. Whenever one big player goes down, especially a trading platform, there are many other people or institutions with money on the platform. I think we've seen Genesis halting withdrawals. I think there probably may be one or two more, a couple others. I don't know how many. But each time there's cascading effects, the effects become smaller. So I think overall, the industry is fine. But there will be some probably.
You tweeted, then deleted a tweet suggesting perhaps liquidity issues at the likes of Coinbase as well as Grayscale. Is there reason to worry about that?
I don't think I tweeted about Grayscale, and also I didn't say there's liquidity issues at Coinbase. I was just referring to two articles. One article says Coinbase says Grayscale has 635K Bitcoins with them. The other article 4 months ago says Bitcoin only has 600K Bitcoins on the exchange. I understand the exchange is separate from the custody. So I just posted as a question, are those two numbers correct? But of course, that caused a lot of misunderstandings among communities, so I deleted the tweet.
Are there solvency issues to do with those companies? Some say that perhaps you tweeted because you wanted to build your own empire to spread the fear, the rumors.
Not so. Okay, so I don't know if there are issues with those other businesses. The thing with other businesses is unless we get very accurate financial statements, wallet addresses, we don't know for sure. But I'm not tweeting that because we want to build our empire. I think I actually reflect on the FTX situation, and I kind of blame myself for tweeting that too late. I think as an industry, we let FTX got too big before we started questioning some of those things. So I'm taking the approach where we ask questions much earlier. It does not mean any attacks on any of our industry peers. We just want to build more transparency and more scrutiny into the industry. Having said that, Coinbase has been operating for 10, 12 years. I think, they're listed company in the US. I'm sure they already have a lot of audited financials. Just we don't see that on the blockchain. For people in the industry, we like to see data on the blockchain, which is actually the most transparent way to display information.
CZ, you've talked about launching a crypto recovery fund. Where are you on that? You've talked about interest being quite substantial. Who's interested?
Yes, so we should have a blog article going out today. There's been back and forth on how to structure that. Do we make that a loose fund or do we make it an actual fund? I think we're kind of going with a loose approach where different industry players will just contribute as they wish. So I think a blog post is going out today. I think we're structuring so that it's going to be quite public. Whoever contributes move funds to a blockchain crypto address that people can look at. So it's not just some behind-the-scenes fund. So I think that's kind of being finalized now, and I think a blog post is going out soon.
Now, as the Binance CEO, CZ, talking exclusively to Bloomberg. Joining us now with analysis, Bloomberg crypto reporter Emily Nicole. Emily, good morning to you. So let's start with what we heard at the end of that conversation, which was about this fund that Binance wants to set up to buy up distressed crypto assets. We think he's been in the Middle East, well, in Dubai, talking to various parties about that and raising some money. What more do we know?
Well, he did say on TV that he was in Dubai mainly to talk about assets for Binance and not so much for this fund. But we do know that he's been talking to industry players around the world for this fund over the last few weeks since he first mentioned it. And there has been several bits of interest from that. I think he even told Bloomberg TV not long ago that he had 4 or 5 funds already interested in that, and several industry players are keen to contribute to what he calls a loose fund. So it won't be like a typical structured fund that you might see from a VC or some kind of conglomerate consortium, but somewhere where players can put money in and hopefully then if they don't spend it all, withdraw it back at the end of it. Of course, though, you know, still finer details to be worked out there.
Okay, so we'll watch how that one develops. What about the consolidation within the sector or the buying up of businesses that haven't been doing too well? Does it look like at the end of that, Binance is going to end up with buying some of its some of the other struggling businesses in crypto?
That definitely seems to be the intention, at least buying up like large stakes or buying them whole. We're not too sure what they plan to do, but that has always been kind of the motto of Binance and its VC arm, Binance Labs, is to benefit the exchange and also benefit the wider industry by having well-capitalized players behind them. The concern there is that Binance is the largest exchange that we have in crypto, and so the more players and assets that it accumulates, the bigger that hold gets. And as crypto moves towards becoming a more regulated industry, hopefully in time, who knows what regulators will have to say about that footprint.
Yes, on that subject, it's really interesting how CZ seemed to want to blame himself for not speaking up on FTX earlier, saying he wished he'd sent the tweet earlier. But I mean, should it be up to the sector to police itself, or should it, like in other lines of finance, be up to regulators to do that?
It definitely seems to be the sentiment within crypto that they feel that they should police themselves, not just because regulators haven't been there in the past, they're still kind of getting their feet there, but also because there's a bit of a distrust for government entities and interference in that way. Decentralization is obviously one of the biggest parts of the crypto ethos, and so therefore to police itself is what they hope to do. CZ has said that he wants to be more vocal on Twitter, start calling things out. That's why we saw him talk about Coinbase and Grayscale and the tweet that he deleted, because in some ways I guess that is him doing his part to do more in terms of bringing out all sides of crypto and bringing it to the light. But we'll see how effective that is.
And whilst there might be opportunities in the demise of others, it also raises questions about the sector, doesn't it? So perhaps they want to avoid that situation. Emily, thank you very much. Bloomberg's Emily Nicole with the latest on the crypto space. And tune into Bloomberg Crypto every Tuesday, 1 p.m. New York time, 6 p.m. in London. Our weekly show covers the people, transactions and technology shaping the world of decentralized finance. This is Bloomberg.
While Teslas and the like make for good headlines, the reality is that even if every car on the roads today went electric, it wouldn't be enough to curb global emissions to avoid catastrophic climate change. Greenhouse gas emissions from transportation account for about 29% of total U.S. greenhouse gas emissions. So what about the other 71%?
Buildings across America burn fossil fuels to operate. What we want to do is make that all electric. Instead of burning oil and gas to give us the energy and electricity we need, we want to do 100% clean energy, all electric. We want to turn buildings into Teslas. Just like a Tesla or an electric vehicle is all electric with no fossil fuels, we want to do that with our buildings. And if we can do it in one building, we can do it in all buildings. And if we do it in all buildings, we'll reduce 30% of U.S. greenhouse gas emissions.
Welcome to the world of decentralized finance.
I'm going to take a look right here at regulation.
We are seeing digital currencies under some pressure.
Bloomberg's covering all things crypto. The people.
I want to have some of my money outside of the sovereign.
The transactions.
It all comes down to the details here.
And the technology.
How does that affect disruptors like you?
What happens to everything that you're investing in when the last Bitcoin is mined?
Bloomberg Crypto, Tuesdays.
This is Bloomberg Markets. I'm Anna Edwards, live in London. Now, the fallout from Brazil's deeply polarising presidential election is being felt at football's World Cup, would you believe it? While the nation is favourite to win the tournament, fans are divided over whether to wear the team's iconic canary yellow and green jersey. Bloomberg's Joe Easton joins us with the details. And where sport meets politics, there's plenty to talk about right now, Joe. Let's start then with Brazil. And this is the fans being unsure whether to wear the famous yellow and green. Why is that?
Well, this is because Bolsonaro has used it as kind of a symbol of his place with the people. He's wearing it. As we've often seen with politicians, I remember Boris Johnson wearing the England shirt kind of over his regular shirt during the Euros, kind of looked a bit uncomfortable. But Bolsonaro is using it as his way of relating to the people. And now we've seen a backlash of voters that don't want to associate with him.
The fans, yes.
So they're starting to wear their blue shirt instead.
Okay, so question. So the players on the pitch will still be wearing the Brazil kit as instructed, I imagine. But clearly, geopolitics never far from this event. It was certainly a case of plenty of geopolitics to talk about in the run-up to it. And then we've seen some of it playing out on the pitch. I'm thinking of the Iranian team who didn't want to sing the national anthem because of associations with the current regime. There must have been other examples of this.
Yeah, I think we've seen a lot of politics, and it's kind of expected given where it's been, and we always knew it'd be a very controversial tournaments, obviously with the LBG rights and obviously the Iranian national anthem. The team refusing to sing that was quite a shocking moment in terms of really resonated with a lot of people and very powerful moment. So I think we could see more of that going through as the tournament progresses.
Okay, yes, those LGBT armbands not being worn, of course. Now, let me ask you about the action on the pitch as well. The big teams, some of the big teams anyway, struggling against countries that at least the football fans had not expected them to struggle against.
Yes, exactly. So we saw, obviously, the big one was Japan beating Germany, which was huge. So I'm not sure how you say it's coming home in Japanese, but I think we need to try and figure that one out. But then, yeah, we've seen a couple of the big teams have done well. So obviously Spain yesterday winning 7-0, I think it was, against Costa Rica, a massive win. But today we've got Brazil, who we've been talking about, and Portugal as well. A couple of big teams in there. Ronaldo, with all the controversy of the past few weeks, Ronaldo will be playing today, so we'll look forward to that.
Interesting. Back to the national side, away from the club politics. Thanks so much to Bloomberg's Joe Easton for joining us with the latest on football and where it meets politics. Coming up in the next hour, Sebastian Galli joins us, Nordea Asset Management's senior macro strategist. How much is he buying this post-Fed minutes bounce in risk appetite? This is Bloomberg.
what do you say to the cynics that say, look, it's all nice and fine, but a lot of it is greenwashing, and you're not a good company, you're just a less toxic company than some of the other oil majors?
Well, the first thing to say is that, you know, I'm a big believer in we need to put ourselves in other person's shoes in life in general. And so I understand the point of view, and I get that people have that perspective. I don't agree with that, obviously, but I understand where they're coming from. We have an enormous challenge as society, which is to provide the world with reliable, affordable, and clean energy. That's what society wants. That's what society needs. And I believe in my heart that a company like BP is actually one of the few companies in the world who can actually make that happen. We can talk about the things that we're going to grow and over the coming years, and I find it hugely exciting and energizing for our organization. But that's what the world needs, and you simply can't go against the grain of society. You can't defy gravity, and that's why we're making the change that we're making.
Multi-trillion-dollar industry. There's a lot of ground to cover.
Commodities got absolutely crushed.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ. Monday on Bloomberg. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg. Top experts. Great questions.
Good morning. Welcome to Bloomberg Markets. I'm Anna Edwards, live from London. These are today's top stories. Federal Reserve minutes show most policymakers want to slow the pace of interest rate hikes. That has a global gauge of stocks heading for its third straight day of gains. EU members could be headed for a fight over how to curb rising gas prices. Energy ministers are debating that and a cap on Russian oil today in Brussels. And US lawmakers demand that Sam Bankman-Fried and other FTX executives be held accountable for the company's collapse. Meanwhile, Binance talks exclusively to Bloomberg about its plan for $1 billion fund to buy distressed digital assets. Good morning, everybody. Welcome back to this special edition of Bloomberg Markets. It is Thanksgiving. Happy Thanksgiving if you are celebrating. But US equity markets are not open, and so European markets are the focus for us this hour. And we've got European stocks up by 0.6%. S&P futures, of course, not telling us what's going to happen later on today, but telling us what lies ahead, perhaps, up by 0.4%. So in keeping with what we're seeing here in Europe, this positive post-Fed move in markets, positive for risk assets at least. Not so for natural gas prices and Brent prices. Both of those are moving lower, but that has perhaps more to do with what's happening in Brussels. We'll get an update on that in just a moment. Let me get to some FX news. And as we go to the FX board, and you can see what we've got there in terms of the dollar losing some ground in keeping with this risk-off mood. I'll just mention some news coming through from Turkey across the Bloomberg terminal. Turkey cuts its one-week repo rate by 150 basis points to 9%. That was entirely in line with estimates. So the estimate 9%, of course, inflation, even by elevated global standards, running at very elevated levels in Turkey. The US dollar, Hong Kong dollar peg is very much in focus because Bill Ackman has some views, which he has expressed. We talked about those last hour. And Bitcoin in focus as a result of our conversation with CZ over at Binance. Back to corporate earnings, and the French cognac maker Rémy Cointreau expects a return to normal consumption following 2 years of exceptional post-pandemic growth. However, the company is keeping a close eye on potential pressures. The CEO, Eric Vallat, spoke with Bloomberg's Manus Cranney from Paris.
The growth will definitely and hopefully come from China on our side. This is the way I look at it. Obviously, I'm not speaking for the very short term. We hear about measures that are being taken this week, which are not going to help in the very short term. But if you look at China, the prospects are very positive. The comps are probably easier than they have been in the past, and the wine and spirits account for only 1.5% of the total spirits consumed in China. And every time the rules against COVID ease, we see consumption back. We see a strong appetite for our products. You know, the last example I have in mind is We had 3 brand days in Plaza 66, which is the most prestigious luxury mall in Shanghai last weekend, and we hit record sales. Traffic was absolutely huge. We gathered something like 600 VIPs in our boutique, which was truly amazing. And now Shanghai is locking down again. So, you know, the learning from last year anyway, we have to adapt. We have to be flexible.
Okay, you have these monster moments, I suppose, when you get the reopening. I had Moët Hennessy. They're running out of champagne. Have you got enough? Have you got enough stock? Are you fully stocked? Are you carrying extra stock? Are you ramping up preparedness for the reopening?
We are ramping up for sure, preparing for the reopening and again adapting to the environment. We were hit, for instance, in May last year because we had only one warehouse in China, which was based in Shanghai, and Shanghai was locked down. Now we have 3. So we are preparing this way as well, you know, from a logistics standpoint. On the liquid front, we've been running out of stock for the past 2 years as the US were booming dramatically. We are now in the process of recovering a good level of stock, even though our stocks are still very low in China, for instance, while they are now improving in the US. But clearly you see celebration, you know, whether it's in, whether... Sorry, please.
Sorry. No, but I suppose the natural corollary to that is, I mean, it's a beautiful premier product. It's already moderately expensive to have. So do you squeeze it? Are you going to raise prices given the restricted supply and the issues around that? What is tolerable for your average client? Are you going to raise prices 5%, 10%? Just give us an indication.
Between 5 and 10 is a good benchmark. Huh? Just so you know, prices, in fact, inflation, current inflation is creating a positive context when it comes to managing prices, obviously, and it's favorable as such. But if you drive your price, depending on inflation, you take risks for your brand. So for us, in fact, pricing is driven first and foremost by pricing power, which comes from the quality of the product, the desirability of the brand, the quality of the experience you can propose to your clients.
The CEO of Rémy Cointreau speaking earlier on Bloomberg, talking about the business, talking about pricing and the pressures the business is under and the opportunities, in fact. Now, let's get back to the broader equity market story. Most Federal Reserve officials now seek to slow the pace of interest rate hikes. That is according to the minutes of the latest meeting of policymakers. It's a signal that they are leaning toward downshifting to a 50 basis point hike in December. Joining us now is Bloomberg Equities editor Ksenia Galutko. Ksenia, markets clearly want to hear this message, don't they? And it seemed that the Doves had quite a strong voice in these minutes, and that was a message that the markets wanted to hear. Equity markets, therefore, rally to 2-month highs. Does that seem like a sustainable position?
Well, that's a good question going forward, because we have seen quite a strong rally from those September lows, both in Europe and the S&P 500. We've had a couple of bull markets, the Eurostoxx 50, DAX, FTSE MIB. So this recovery has been quite strong on the slower inflation data, on the potential Fed pivot, but we have been burned before. We remember the rally in the summer that ended in tears, unfortunately, for a lot of stock market participants. So it might not last. The main concern right now is the earnings contraction going forward into next year. So the likes of Morgan Stanley's Michael Wilson, who are more bearish on the market, say that yes, we might see a rally at the end of this year. It might go further from current levels, but then the first quarter we might see new lows. And Mike Wilson is forecasting a 24% drop for the S&P 500 in the first quarter from current levels.
Okay, so that's some of the downside that he sees. I spoke to Beata Manthi of Citi in the last hour of the program, Ksenia, and she was talking about what she expects to see for European corporates. She was drawing a distinction between the various sectors and talking about how some of the really deep cyclicals have already priced in a really severe EPS recession, whereas others, and she was saying industrials is maybe amongst them, still might look a little bit expensive. So I suppose there's that disconnect within Europe.
Absolutely, yes. Some sectors have done so much better than others. So energy and miners are some of the top performers this year. And with the headwinds gathering for the oil price, of course, there's more and more forecasts that energy EPS will see a major contraction next year. The other sector to look at is banks, because banks obviously benefit from higher rates, and they continue to be quite cheap and are down about 4% this year. And then another group of sectors to look at is the ones that benefit the most from the China reopening. So luxury stocks, industrials. One of the reasons that the DAX in Germany has rallied so much and was one of the first major indexes to enter bull market is this optimism over China reopening, the economic boom that it brings with it. So let's see where it goes. It all really hinges on whether China is actually going to lift those restrictions or not.
Right, and that's interesting because in years gone by, I remember we used to look a lot at Germany and think about the trade links there, the industrial trade links, and that was the sort of outlet to some extent for what was going on in China into Europe. Now it seems to be Paris. Whenever we see China headlines, we see luxury names in Paris moving quite significantly.
Of course. Well, one of the reasons is because LVMH is one of the biggest stocks in the Stock 600, right? So its importance is huge. And then, of course, we look at Kering, we look at Burberry. So all these stocks have done pretty well. They have held up despite all the recession fears this year. It is mainly because the luxury consumer is pretty strong, and Americans and Asians are starting to go back to shopping. The stronger dollar is really helping boost sales. So if China does indeed reopen, this will be a huge boon for these stocks.
And we were hearing just at the start of this program from the Remy Cointreau CEO, and he was talking about their experiences in China. Let's go stateside then and think about what's happening with tech earnings, because we've seen the tech sector be really at the epicenter of market selling on fears of higher interest rates. But that's a very 2022 story. So what's the expectation for tech going into next year?
Well, that's an interesting flip, actually. So just a month ago, in general, analysts were expecting tech earnings to rebound next year just because of the contraction this year and because of the strong drop in the NASDAQ. And in general, in big tech, it has been strongly unloved this year. But in the past month, analysts have generally pared those expectations quite severely. So now they're expecting another year of contraction for tech earnings, which does not bode well for the NASDAQ or S&P 500 outlook in general, just because the U.S. market is so dependent on those tech stocks. So big tech is likely to continue suffering next year, probably until the end of first half of the year, when most strategists expect the Fed to finally pivot on the interest rates.
So my guest, Beata Manti, last hour was talking about how, yes, the Fed has been a crucial conversation to watch for stock market investors, but increasingly recession fears is going to be the thing that drives action. And interesting to note that I think your team putting out a note today on Bank of America saying that private clients are flocking to bonds and out of stocks amid fears of a looming recession. And I suppose it's that trade-off between the two. Just what kind of a haven will bond markets be during a recession is a big question.
Yes, absolutely. So we've seen very strong inflows into bond funds, something that you would have never seen over the past 2 years when equities were really the king among asset classes. So now investors are really turning towards a fixed income, and Bank of America is saying that their private clients are really shifting toward bonds. Now, equity funds have been seeing about 9 weeks of outflows. So we are seeing that, those expectations of recession, of earnings contractions, they're spooking investors into going into that safer haven. But again, Bank of America says that this is the first half of next year. Bonds will rule. But starting from the second half, they do expect equities to recover as the cheaper asset class, as the Fed potentially pivots. So earnings potentially recover. So equities can go back to being a more popular instrument in the second half.
You mentioned their equity market outflows over the last 9 weeks, which is interesting given that we've actually seen quite a lot of strength in equity markets over certainly the latter part of that period. Does that tell us that a lot of people have missed out on this equity market strength?
Yes, absolutely. It is a very interesting thing with these flows because they are comparing mutual funds and ETFs. So generally ETFs move along with the market because it's more of a retail product, and then mutual funds are more conservative. So that's where most outflows have been going. But yeah, in general, these fund flows, it will be very interesting because year to date, equities still are in the plus. So they're still positive in terms of inflows, but the positioning is quite conservative. So investors have seen this year a huge sell-off, one of the worst years that they've seen in decades for the stock market returns. So they are quite conservative. That's why any sign of a pivot from the Fed, any positive comments, any dovish comments, they trigger these big rallies that we've seen since this end of September.
Ksenia, thank you so much. Thanks for coming to talk to us. Ksenia Galushko joining us there with an update on equity markets. Let's keep you up to date with receive news from around the world and get a First Word News update. Joining us with a briefing, here's Laura Wright. Good morning, Laura.
Good morning, Anna. Most Federal Reserve officials now seek to slow the pace of interest rate hikes. That's according to minutes of the latest meeting of policymakers. It's a signal that they are leaning toward downshifting to a 50 basis point hike in December. Talks between European Union nations on a proposed price cap for Russian oil have bogged down. Bloomberg's learned that the EU's executive arm wants a cap of $65 a barrel. Poland and the Baltic nations believe that's too generous to Moscow. But Greece and other countries with big shipping industries don't want to go below $70 a barrel. In Ukraine, a barrage of Russian missiles has knocked out power for millions. The attack came at a time when temperatures are below freezing. In a virtual appearance before the UN Security Council, Ukraine's President Volodymyr Zelensky calls the missile assault a clear crime against humanity. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Laura Wright. This is Bloomberg. Anna.
Laura, thank you very much. Coming up next on the programme, part of our interview with the CEO of Enel as he navigates the energy crisis. We'll get the perspective of this particular energy giant. More on that next. This is Bloomberg.
Can't seem to get enough of Prada. Loafers, nylon bags, and its Miu Miu micro mini skirt have been flying off the shelves into and onto the arms of young consumers. Fashion tech company Lyst placed Prada second on its fashion index at its highest ever ranking. So what could be making this over a century-year-old fashion house appealing to a new generation of consumers?
What Prada has navigated adeptly is their overall kind of understanding of how cultural conversations are happening online, their ability to partner with various cultural figures.
Gen Z faces are at the front of Prada's advertising to this new market. Maya Hawke, Hunter Schafer, and Sydney Sweeney will be familiar to any fans of Stranger Things or Euphoria. There could be another factor at play, the environment. Of those surveyed by The Lancet, over 59% of Gen Z said that they were extremely worried about the climate crisis. So, for example, the revival of Prada's iconic nylon handbag using eco-friendly materials may be winning kudos among these shoppers. Of course, Prada and Miu Miu are not inexpensive brands, and as the global cost of living crisis hits, these brands might start to feel a pinch. But, for now, Gen Z seem to be reaching for their nylon handbags and not letting go.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Shed light on dark matter. You will make aging optional. You will turn 5G up to 11. Because when you subscribe to Bloomberg, you won't just get news. You'll get insight into limitless possibilities, knowledge, and inspiration to feed your ambition. So before you invent, pioneer, disrupt, before you change the world, Bloomberg.
The markets count down in Europe from the financial centers of the world. Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
Welcome back. This is Bloomberg Markets. I'm Anna Edwards in London. Now, the Italian energy company Enel says there is very little execution risk on its disposals plan. After it unveiled earlier this week, it is seeking to offload 21 billion euros worth of assets to reduce its record debt pile. Enel's CEO spoke earlier on Bloomberg.
The buyers are out there. In fact, they are actually more than willing, and that's one of the reasons why we decided to put some of the assets on sale. I mean, we think that there is a good moment for gas assets, for example. This was a new decision we took in the light of what gas's value is today, and I think the debate we just heard shortly before this interview was underlying the importance of that. And we are going to focus our presence in all the countries where we can have an integrated play, which means help our customer go through this electrification journey the best way possible. And some geographies that don't fit within this scheme are going to be sold to buyers that at the moment are quite hot on them. So we see very little risk on the execution side. In fact, 5 out of these 21 billions have already been executed during 22.
Francesco, it's Francine. Good morning. So the rationale is really to be able to better service your clients in the limited number of countries that you'll be more present in?
Exactly. We have 6 core countries, as we have decided to call them, that are basically Italy, Spain in the European continent, the USA, and in Latin America, Brazil, Chile, and Colombia. These are countries where governments are really committed to electrify and decarbonize the economy, and we have masses of customers that are going through this huge change. I think that's where most of our technology and our know-how lies, and that's where we want to focus our efforts. Elsewhere, there is value to be created for other investors, and we're going to streamline our operations in order to really concentrate on where our skills are best put to work.
And I know there's a big focus for you and the team on the US, and you've won that license now to provide renewable energy to businesses in the United States. Obviously, the Inflation Reduction Act, a big part of that. Just detail for us your ambitions within the US market. You have that license. What is the end goal for you and Enel in the US?
The growth space in the U.S. is really large. It's been like that for a long time. It's now with the IRA, I think we have a much more stable 10 years horizon in which you can plan your efforts. And part of that is that we want to couple a very strong growth on the generation side with renewables. We're adding roughly 1.5 to 2,000 megawatt every year going forward in the next few years, and as we've been doing so far, with a growth on the business customer base, and you see that starting from the Texas license. We want to really start becoming a retailer on the business side, and I think that's a very promising growth area for the U.S. So not a regulated business, but a customer business coupled with our generation. On top of that, don't forget, we are the second largest or the first largest operator on demand response. So we already have a big presence in that very interesting market.
That was the Enel CEO, Francesco Starace, talking there to my colleagues Tom McKenzie and Francine Lacroix. Sticking with the energy theme, EU energy ministers are meeting today in Brussels to discuss the European Commission's plans for oil and gas caps. While an oil cap deal could be agreed today, the bloc is more divided on the gas price cap. Maria Tadeo has been speaking with some of the policymakers.
It would be good to have a gas price cap. The gas price cap, which is in the document currently, doesn't satisfy any single country. It's a kind of joke for us after so many months of discussions and proposals.
The proposal that's on the table now regarding the market mechanism is flawed. There is a lot of risk for damaging the energy security of supply and also for the stability of the financial market.
European Council gave us clear instructions that we have to take care of possible risks, and we have done so. Of course, some risks do remain, but this proposal has been designed in the way that it helps us if there is another time period like we faced in August, but at the same time it will not be triggering the intervention to the market unless it is really necessary.
So some of the voices gathered there in Brussels talking about the gas cap plan. Let's start that in our conversation with my colleague Maria Tadeo, who is in Brussels for us. It's faced some pushback. We heard there in those clips that you've been gathering for us, Maria, some of the pushback against this gas plan, and then we ended with the voice of the architect of the gas plan, I suppose, the Energy Commissioner for Europe, for the European Commission. Where does this go next then on the gas story?
Well, Anna, you heard it there. A joke, not serious, not a good proposal, a mockery, flawed. That's the kind of language that we've heard repeatedly this morning when it comes to that proposal from the Commission to have a price cap that would only be triggered at 275 euros megawatt hour for 2 weeks. Now, in some ways, this is a very Brussels-like cap in the extent that no one likes it. The countries that want to see a price cap essentially say de facto it is not one and it won't bring down prices. The countries that worry about supply say artificially changing pricing in a market that is so fierce and is so tight right now could lead to disruptions in supply. At this point, of course, the talks are ongoing, but the tensions are high. And at this question, well, if you ask me, do we get a compromise deal? Do we get a breakthrough? Today, I don't have a crystal ball, but based on the reporting that we have, we're not going to get anything that looks like one today, and that means this will get thrown back to the Commission again.
Okay, so that's on the gas side, not looking likely. Maria, thank you very much. Bloomberg's Maria Tadeo joining us there from Brussels. Let's get some more perspective on this. Gas prices moving lower with the energy ministers debating things in Brussels, as you heard. Bloomberg's Lyubov Pronina is with us and can give us some insight into what's been happening to gas prices in response to what we've seen here from policymakers in Brussels.
Well, it is a little bit earlier to talk about a real response of gas prices to what is being discussed, because the ministers are meeting in Brussels as we speak, and you have seen earlier comments on the gas price cap proposal from the European Commission, that ministers are not happy about it, that it's a joke, it's mockery, it's not workable, and a better decision, a better solution is needed according to member states. But what we've seen with gas prices, benchmark futures dropped today, capping 4 days of gains. And again, it is for us to see later what the impact this conversation in Brussels has. So far, they were gaining because of colder weather forecast in Europe. Yes. Today, the future prices dropped, but they're still 8% up for this month.
Lyubov, thank you very much for that. Bloomberg's Lyubov Pronina joining us there from Brussels. So all angles on the gas conversation covered there in Brussels. As she said, we've seen movement in the price, but very much reflecting the weather as well as the policy making. We'll get back to a conversation about the global economy next. This is Bloomberg.
In the past 2 decades, China has built large infrastructure projects in almost every country in Africa.
African governments themselves said, we are tired of aid and charity. We want to do trade. We want to be treated like partners. The Chinese came along and said, great, we don't do aid and charity. We want to do business with you.
Global Gateway will mobilize 300 billion euros till 2027.
Now the US and Europe are answering back with their own infrastructure initiatives to counter China, but African experts are skeptical.
China has been that guy around the corner with, a bouquet of flowers to Africa, of the US, Europe and the UK have time and time again said, be careful of the flowers you see out of the window, they have thorns on them.
No one covers the world like Bloomberg.
My team thinks 2023, we avoid a recession. I'm a little more skeptical about that.
China and the U.S. both do not want to see nuclear force on the European continent.
The regulators here in the Bahamas are ongoing with their investigation into FTX.
With unmatched reach and resources from more than 120 countries, the moment news breaks 24 hours a day. Bloomberg, your global business authority. When innovation strikes, Bloomberg Technology is there with the news and analysis you need. Every weekday, only on Bloomberg.
This is Bloomberg Markets. I'm Anna Edwards, live in London. Let's check on the markets for you, shall we? This is a special edition of the programme. It is Thanksgiving, so no market action in the United States, no cash, treasuries or equities. But of course, equity markets are open here in Europe. So let's have a look at where we are trading. We are up by 0.5% on the Stock 600. I can see the London market lags behind a little, but the CAC 40, the Xetra DAX doing particularly well, up by 0.9% today. E-minis are open, so that's US futures on the S&P, and they, we closed on the cash S&P yesterday at a 2-month high, suggesting in the futures there might be a little bit more upside in this post-Fed minutes rally that we're experiencing here. Gas prices under pressure. We talked about that last hour. There's a sort of ebb and flow happening there to do with the weather forecast. Also policy making in Brussels, very important. We'll get an economist perspective perhaps on that shortly. Brent crude at 84.60 as we saw conversations around a $65, $70 cap on Urals oil coming out of Russia, and that moved the markets in yesterday's session. On to FX markets, and you can see that the dollar is a little bit weaker, not as weak as it was, down 0.1% or so on the Bloomberg Dollar Index. We see appetite for the yen, this to do with dollar weakness, the risk-on rally, but also the fact that energy prices are cheaper. That plays well for the Japanese economy, and so the yen rallies. We've talked a little about the Hong Kong dollar this past couple of hours, this to do with views around the peg, and Bitcoin also really topical. We'll return to that later this hour. Recap on our exclusive conversation with CZ from Binance. Let's get to the global economy conversation. Sandra Flippen joins us now, ABN AMRO chief economist. And Sandra, very nice to have you with us. I think we should start with the European economy, given that our US friends are perhaps getting ready to get stuck into the turkey and the pecan pie. A little early for that, perhaps, if you're actually in the US, but globally, maybe they are. So let's talk about the European economy. We have policymakers in Brussels today trying to put caps on gas prices and oil prices. A lot of doubts about whether those caps will prove to be effective. What's at stake in that conversation for you?
Well, that is very interesting discussion, but there's also quite a lot of criticism about those plans, because if you look at the details of those plans, so basically the ceiling is at 275 euros for 2 weeks in a row. That's when that ceiling would kick in. At the same time, also, the condition is that the difference with the LNG price has to be at least almost 60 euros for 10 days within those two-week periods. And if you look back at the past year, basically we would not have a situation where that price cap would have been in effect. So one of the critics is basically that when is this price cap going to take effect? And I think at the same time, the energy ministers realize this, but they're also quite afraid to intervene in this market, because this is a very complex and interwoven energy market in Europe. And if you start to meddle into that, nobody basically knows exactly what's going to be distorted. So that's why they're trying to be very careful.
Yeah, so from an economist perspective then, Sandra, does that mean that you look ahead to the winter, you leave the meteorology to the meteorologists, and you have to assume that European buyers of energy are going to be subject to the ebb and flow, the movement of markets, essentially? I mean, individual nations have all kinds of mechanisms in place. I suppose they rely then on those national mechanisms.
Yes, so that is definitely the case. So if you look at the Eurozone as a whole, there is about 3 to 5% of Eurozone GDP in compensation in place. And that is not even taking into account the latest additional compensations for businesses. So a lot of compensation coming up from individual countries. At the same time, there's this kind of fine balancing line between, on the one hand, trying to prevent a real income decline for households by compensating. On the other hand, because this is such I mean, whether your energy bill basically is going up and by how much really depends on a lot of individual factors. So you see a lot of dispersion in the market. And what is kind of a cushion to a real income decline for some is actually a lot of additional inflationary expenses for others. And so this is also why the ECB is so worried about this situation, because they say that actually all this compensation could be very inflationary, and that could basically mean that interest rates have to rise further in order to basically take away this additional heat that is added from the fiscal side.
Okay, and where does that leave you in your expectations as to whether the ECB steps down in December from 75 to 50 basis points, and what that in December, and then what that means for ECB policy for the year ahead?
Yeah, so if we look at, so first in the macro, what we expect is that basically the Eurozone is already in contractive territory. We already see also the business activity indicators pointing towards decline. And that is actually despite a global supply chain that is clearly recovering. So if you look at the global supply index, which is a part of that survey, that is basically has recovered to pre-pandemic levels. And so taking that into account, the business activity is probably contracting even worse. Now, what this means for the ECB is basically its main mandate is inflation, and inflation was unexpectedly high in October still. So we think now that the ECB will keep hiking until it gets to about 2.5% terminal rate in the end of the first quarter of 23. And then it will want to see things play out before it takes any active decision. So we think it will be really at the end of 23 at the earliest before it starts moving interest rates down.
Okay, so pausing maybe for 3 quarters or so. That takes us into a conversation about where we see manufacturing activity taking place, Sandra. And you made a comment ahead of our conversation here around a concern in the Eurozone about whether energy transition costs are going to act as something that causes some industries to want to locate elsewhere. And you maybe mentioned the United States. I wonder what's the important detail about the way that the CHIPS Act is put together in the US that makes that an attractive pull factor, whereas EU policymaker is a push?
Well, that's actually a combination of basically the CHIPS Act, but also the Inflation Reduction Act is quite massive in terms of subsidizing economic activities around the transition. And we think that just to take, for example, the car manufacturing, electric vehicle manufacturing and sales, there are kind of massive incentives in the US coming up for that. And at the same time, what you see in Europe is basically that firms are, especially energy intensive firms at the start of commodity chains, they are severely under pressure from the energy price rises. And at the same time, they have this kind of long year ahead half clarity about what policies are really coming up in the European Green Deal. But one thing is sure that it's going to be a squeeze. So it's basically a blow from the energy crisis plus a squeeze from transition policy. And then on the other side of the ocean, there's this kind of wonderful world with all these subsidies. And that is a worry to a lot of European policymakers and frankly other people behind the scenes who are basically afraid that Europe will lose a lot of manufacturing value overseas.
So, and how substantial a fear should that be then, do you think? Because we have heard some policymakers in Europe, some politicians in Europe express concern around the Inflation Reduction Act in the United States. So it's being talked about at EU level, isn't it, Sandra? Do you think this is a development to watch?
Yes, it is nobody really knows how big this impact will be. And also it's frankly quite hard to say what element of that, let's say that threat is a threat part of a negotiation within Europe, and or whether it is a realistic threat and that will also manifestate itself. That's quite hard to say at this stage. But it's certainly a conversation at the European level that also taps into this issue of strategic autonomy in Europe, and that involves manufacturing industry as well.
Thanks so much, Sandra, for your time. Good to speak to you. Sandra Flippen of ABN AMRO joining us to talk about the European economy. Now, Ukraine's Deputy Minister of Economy says the country's finances are expected to fall, or the economy, sorry, is expected to fall 35% by the end of the year. She spoke with Bloomberg this week.
I would say that during the times of the war, Ukrainian economy is demonstrating huge flexibility and adaptivity. However, we are very grateful for the help, but we think that maybe for the end of the year, the Ukrainian economy may fall by 35%. But at the same time, the Russian economy may fall to 4 and 6%. And it means only one thing, that all the sanctions are not enough. And every time when I meet my foreign friends, when I meet all the representatives of the other countries, I reiterate on the fact that we need more sanctions, because this will not let Russian government make this massive attacks on Ukrainian infrastructure.
Minister, I want to have my colleague Kriti Gupta in New York ask you a question now as well.
Thank you, as always, for joining us from our folks here at Stateside. I want to talk to you specifically about the role Ukraine plays in terms of transporting natural gas. Can they maintain that role in the coming years?
Actually, I would say that Ukraine is now demonstrating a huge bravery and the things that no one would expect from Ukraine. So I think that we are going to be up to all the challenges, and we will stay strong.
Now, on this trip to Canada, obviously this is a unique opportunity for you to engage with Canadian officials, but also Canadian businesses. What are those conversations like right now? What's coming out of those conversations?
Actually, we speak with them about investments, about the ways to invest in Ukraine, and the great opportunity that was launched not long ago is Advantage Ukraine platform. It's an online platform where any investor can file an application and find the industry to invest in Ukraine. We are very open to the investments into the military tech, into metallurgy, into agriculture and IT industry. And we believe that on our way to victory and after the victory, Ukraine will become an investment mecca for the whole of the world. So we are talking about supporting from Canada private investors in all of the fields, in the field of big enterprises, small and medium enterprises. The help is never enough, because we are now having war and we need this help and aid from the international society.
That was Ukraine's Deputy Economy Minister speaking earlier to our colleagues here at Bloomberg. Now, keeping you up to date with news from around the world, here's a First Word News update with Laura Wright.
Thanks, Anna. In China, daily COVID infections have risen to a record high. The country reported almost 30,000 new infections on Wednesday. The recent surge comes at a critical moment for leaders. They have to decide whether to tolerate some spread of the virus or revert to strict COVID-0 restrictions that could hurt the economy. Most Federal Reserve officials now seek to slow the pace of interest rate hikes. That's according to minutes of the latest meeting of policymakers. It's a signal that they are leaning toward downshifting to a 50 basis point hike in December. In Colorado, the suspect in the killing of a 5-people shooting at a gay nightclub will be held without bail. Anderson Aldrich made